The civil rights movement left us with this wisdom. Give people light, and they will find the way. Give people light.
The yields today, 0.78%, rounded up to 2 digits. We do the 30-year bond to 4 digits, 1.5732. Well, very quickly, Lisa, you dazzled me out on Twitter with the Bloomberg grab of the 530s spread. Discuss.
Basically, a lot of people are betting that the yield curve, the gap between longer-term yields in the U.S. and shorter-term shorter-term rates, will continue to widen, especially if there is this blue wave. And you are seeing that continue with this gap widening to nearly the most since 2017, the 30-year, 5-year gap. Basically, I don't know if this is a reflation trade or just this idea the Fed has short-term rates pegged and the supply will become an issue. Of course, a lot of naysayers. We'll discuss, Tom.
We will see a headline out right now from the Department of Justice. They're going to file an antitrust suit against Google on Tuesday. And, of course, that goes right into earnings. I mean, John, that's in the backdrop, isn't it? Before we get to Tobias here, this whole regulatory path here it's tangible into the tech earnings season, isn't it?
It has been for the last 5 years or so, Tom, and not much has happened to change the business models of these big companies.
Yeah.
And I would say the big point to tie together what we've just discussed with that headline right there, the biggest threat to these big tech companies and their valuation at the moment, Tom, might not be regulation, it might be higher yields. And if we can get higher yields, higher real yields, then that's what fuels that rotation, at least in the minds of many on Wall Street.
Well, we will see. Right now, we've been waiting for this. Tobias Lefkovich with us with Citigroup, the acclaimed Surprise Index, and, of course, their chief U.S. equity strategist. Tobias, what does your Surprise Index say right now?
So the Citigroup Economic Surprise Index really spiked significantly post kind of the reopening of the economy. And in that respect, it couldn't sustain that level that it had before. If you look at it historically, it really sharply rose, and now is easing back. And you could almost predict it was going to just because of how far it had run. And sometimes this model is taken a bit too aggressively by people on the street. It really just couldn't keep staying this high as it was, even if the news was good.
Tobias, so much of the reopening was just mechanical. We went from shutdown to reopen, and then bang, the sequential improvement's obvious and predictable. What I've been surprised by, Tobias, is that we haven't reclaimed those peaks of early June in various parts of the market, Treasury yields, the rotation hopes. What do we need, Tobias, to get back that feeling again, that sentiment?
So I'm going to take a bit of an issue on what the bond market is saying, because if you look historically,
sure.
The bond market, just 10-year Treasury yields would move very consistently with the moves that we would see in tips break-evens on inflation expectations. That was true for about 5 years, and that kind of broke apart, call it the last 6 months, where tips break-evens, inflation expectations have been rising, where the 10-year yield hasn't. The only other time we really saw that was back in 2011, 2012, during the periphery debt crisis, where, again, you had central banks being aggressively buying sovereign credits, and as a result, you saw this differential. We have this, if you want to call it, artificial suppressant on the 10-year yield, and I'm not sure it's indicating as clearly what's going on in the economy versus what the central banks want to do in terms of keep funding costs low. So the bond market, in some respects, is telling you inflation picking up, the economy getting a bit better, and the outlook being stronger over the next several years, not necessarily the next several months. And then you start getting into timing of vaccines, you start getting into the stimulus discussions, things like that, about the nearer term. So I think there's a little bit of a differential here in the fixed income markets, and depending on what you want to look at, you can make an argument.
Completely with you, but the correlation's pretty strong. If you look at nominal yields early June, that's where we peaked post-pandemic. Look at S&P 500 banks, that's where we peaked post-pandemic. Yep. That first week of June, Tobias. So what is the difference between now and early June, and what do we need to see to get back to that at a time when so many people are still hoping for that rotation away from big tech?
Right. So I think on the rotation front, if you want to think about it in a slightly different description of value versus growth, which is the big debate amongst most investors that we talk to, there are three elements to the value, trade. There is the financials, which you've rightly pointed to, nominal yields. You need them to go up to make the financials get better. There's a second piece, which I will call cyclicals, where ISM trends have improved and they are acting a bit better. We did surveys with our clients, and they're looking to 2021 as areas like industrials and materials leading the market. And then if you look at the third component, what I call the COVID-impaired names, travel, entertainment, leisure, hospitality, those kind of things, you need vaccines. So there are different elements to what would get you going within different parts of the value trade and causing rotation. Your point earlier, John, about the the technology names coming off, it is going to be a function of higher rates to some degree, because you do your discounted cash flow models and your terminal values will be affected meaningfully. It'll be around regulation. It'll be about taxation. It'll be around China. It'll be around a variety of factors, not a single, magic bullet, if you want to call it that.
So do you expect big tech to underperform if there is a blue wave?
I think the blue wave argument would do the following. It would generate another, if you like, reason to believe industrials could do better if you get strong infrastructure spending, for instance. I'm not sure the blue wave itself defines 10-year yields. I'm not a fixed income guy, so it's not really my area. But I also think that investors went from a month ago saying this is going to be a tight election to with potentially contested results to, okay, it's for sure a done deal. Mr. Biden wins, the Senate flips, things like that. And as we learned in 2016, going in with that kind of confidence is probably maybe misplaced.
Tobias Levkovich, great to catch up with you, sir. Citigroup Chief US Equity Strategist. Some headlines coming from an interview with the President, I believe, that has just taken place on Fox News. The President's saying the mute button, it's crazy. He says some funny things are going on with the debate committee.
Tom agrees.
I don't think he was referring to you a little bit earlier on this program, Tom. I think he's thinking about Nashville, Tennessee, and Thursday with the VP Joe Biden. So this is the setup, Tom. There are 15-minute segments, and each segment will begin with 2 minutes of uninterrupted conversation. One person speaks 2 minutes, the other person speaks 2 minutes. Those rules already agreed. Reinforcing those rules, you will have a mute button to stop someone from interrupting you when you have those 2 minutes to talk. But those 2 minutes were always meant to be uninterrupted. A bit like me trying to talk now with you going to cut in all the time.
Oh, John, good job. Good job.
There it is. Okay, I'm back. But Lisa, weigh in here. I think this is really important. I would suggest the mute button benefits the president because he's going to be able to cogently get out his message he's desperate to get out.
I think it's going to put the moderator in even more of a hot seat in terms of when to press the mute button. Is it exactly at 2:00? Do you give them a chance to finish their thought? How do you get that in? I mean, it becomes very difficult. You just sort of, they're all of a sudden talking and then...
Oh, my God, you wired her up as well?
This is just beautiful on radio. You're both at it.
This is, for those of you on radio, Pharaoh's just crushing it with the engineering
He's
in
doing
London.
a great job.
I mean, you got double mute buttons now.
Well, I mean, honestly, it's going to be really tricky for the moderator.
Tom Keene, Lisa Brawitz, I wish. Coming up on this program, Isaac Boltanski, Compass Point Managing Director of Policy Research. 40 minutes to go. Just another 40 minutes.
John, welcome to my world. That's all I got to say.
You got a couple more days, too, John.
This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. The Justice Department is poised to file a landmark antitrust suit against Google. According to the Wall Street Journal, the suit will allege that Google engaged in anti-competitive behavior to preserve monopolies in search and search advertising. Google has been the target of scrutiny before, but it's always avoided a real showdown with the government. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are drawing closer to an agreement on a coronavirus relief package. The two will talk again today. The deadline Pelosi is set for having clarity on a bill that could pass by Election Day. Even if the two sides reach a deal, Senate Republicans have been balking at the price tag. President Trump and Joe Biden will be muted at times in Thursday night's final debate. The debate commission says that each candidate will have an uninterrupted 2 minutes to speak at the beginning of each segment of the debate. Then both candidates' microphones will be turned on. During the first debate, President Trump repeatedly interrupted Biden, and both candidates talked over the moderator. And Goldman Sachs has reached a long-awaited deal with the Justice Department over its role in Malaysia's 1MDB scandal. Bloomberg has learned that Goldman will pay more than $2 billion. That's broadly in line with the bank's prior reserves and analysts' estimates. Meanwhile, Goldman will avoid a U.S. criminal conviction. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Most of our clients we talk to are expecting there to be a really large stimulus in Q1 of next year. And if that happens, then sure, that's positive for the economy. That's a big fiscal stimulus. That's probably good for earnings. But once you start looking through that and you look out 6 to 12 to 18 months, that's when you start seeing the tax increases and the new levels of regulation starting to bite. And I would expect markets may be a little slow to catch up to that.
The stuff that market participants want, followed by the stuff that most market participants do not want. John Lieber there, Eurasia Group, United States Managing Director. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 1 hour and 12 minutes away from the cash open. The opening bout just around the corner in New York. S&P 500 futures up around about 11. We're up about 1/3% on the S&P. If you get to an intraday chart of the S&P 500, we just rolled over in the last 15 minutes or so on that headline from the Wall Street Journal. This is the lead paragraph. The Justice Department will file an antitrust lawsuit Tuesday alleging that Google engaged in anti-competitive conduct to preserve monopolies in search and search advertising that form the cornerstones of its vast conglomerate. This according to senior justice officials. This just seems to have pulled down big tech just in the last 15 minutes. Not in a massive way, Tom. Just a little bit of a move. Still
agree.
positive on the session.
I agree with a little bit of a move of it. Point to 4 digits, 0.7773 in the 10-year, and futures now giving back up 12. Yeah, make it up 12. Dow futures up 91. There's any number of ways to go with Isaac Boltansky. He's at Compass Point, writes a cute notes on what's going on. I do want to focus, Isaac, on something that's in every interview, which is the outcome of a blue president but a continued red Senate. What will gridlock look like under a Biden presidency?
So I think there are two main points to make in response to that. Number one is it would be far more difficult for President Biden in that scenario to actually get his nominees through a Republican Senate. And so a lot of the regulatory agenda that my clients have focused on, whether that's energy, the environment, healthcare, financial services, a lot of their fears around that would not materialize simply because it would be difficult to get those personnel in. The second point is really about what we've all been focused on this morning, which is taxes and stimulus. And in that scenario, with a Biden White House and a Republican Senate, investors should expect any stimulus to be smaller than the base case right now, and for the tax increases that the former vice president has proposed to not come to pass.
So aside from the taxes, there's also this regulatory overhang that was sort of highlighted this morning with this headline that the antitrust suit against Google will go forward, a long-anticipated one. Isaac, how much political will is there among Democrats, if there is a blue wave, to engage in true regulatory scrutiny of big tech that could affect their earnings?
I got to tell you, the big tech narrative reminds me of infrastructure, in that everyone in D.C. agrees that something should be done. But once you start to drill down, there's very little agreement in what should actually be done. So in big tech, just look at the different issue sets. Are we focusing on content, competition, data privacy? There are numerous different avenues to follow. And then you've got to add on top, there are just too many cooks in the kitchen. Is it the DOJ, the FTC, the state AGs, Congress in a blue wave scenario? So, look, there will be continued headline pressure, but when you actually drill down and you use the benefit of history, whether it's Microsoft, the Bells, or IBM, you see that there really aren't that many tools at the moment to, quote-unquote, break up these companies. So the headlines will persist, but in terms of practical impact, I think it's very limited.
And in the end, the market addresses the issue. We saw that with Microsoft. Democrats talking about antitrust, Republicans talking about censorship. Let me just talk about the Senate and the composition of it, Isaac. If it does turn Democrat, just how moderate will that Senate be? And how much of a radical progressive agenda, if it was to go through the House, could actually pass in a Democratic-led Senate?
So this is something that I've been highlighting to clients. About 56% or so of Biden supporters say they support Biden because he's not Trump. And to me, that suggests that the Democratic coalition could have some fractures if they end up winning. And we will have a far more progressive House in terms of policy than we will have in the Senate. And this is important because there are going to be at least 3, possibly even 5, centrist red state Democrats in the Senate, from states like Montana, West Virginia, Arizona. And I think that contingent will push back on the most aggressive and progressive policies that come out of the House. And so that's what informs some of my views when it comes to a blue wave and taxes.
You mean, Isaac, I happen to think you're absolutely dead on here about the power of these centrist Democrats, greatly underrated, and it goes back to Hubert Humphrey and Scoop Jackson from another time and place. How does that set up for 2022? Because the race for 2022 begins that Wednesday in November, doesn't it?
In some ways, we're gearing up for it right now. And so, look, to your point, it's not just going to be the ones that are there. It's also going to be the fact that their ranks will be bolstered by some of these more purple states, whether that's North Carolina or South Carolina or Maine. So their ranks will grow. Furthermore, when we look out to 2022, there are going to be some open seat races in, again, purple states like Pennsylvania and like North Carolina. And I think that will inform Schumer's thinking in terms of policy making and trying to tack more towards the center.
Isaac, just quickly, in the time we have left, does the debate happen on Thursday, given the noise around it still? You assume it still happens?
Look, I think we're going to have a debate. I think that the 2-minute muting function will be interesting, but the remainder of those 15-minute segments beyond those two 2-minute mute periods, it's still going to be the messy, convoluted, just deeply concerning mess that we saw the first time. So, yes, I think it happens. Yes, I think it'll be messy. And no, I don't think it's really going to impact the election because most voters have already made up their minds.
And isn't that the point? Isaac Boltanski, Compass Point Research Managing Director for Policy Research. Isaac, great to catch up, sir. That's the issue. And that's the difference, Tom, as well, between 2016 and 2020 and that surge the president had in the final 2 weeks. There were a lot of undecided voters. And there was also another pool of voters going away from the main two candidates. There are key differences 4 years later.
Well, yeah, there's key differences 4 years later. And, a lot's changed. I get that, John. But what I am seeing is what a lot of people predicted. We mentioned Greg Valliere earlier, but others as well, that this is going to tighten up in the last 14 days. And I think we've observed that just in the last 2 days alone. The North Carolina poll shows that. Tight, 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 with a mystery about this election, and then all the gamesmanship afterwards as well.
This market tightening up just a little bit. Here's the intraday chart from what I'm seeing on the terminal right now. +6 on the S&P 500. We roll over. Positive just 0.2%, not even that now. After 20 minutes ago, the Wall Street Journal came out with a story that today the Justice Department could file that long-awaited antitrust suit against Google. Just a little bit of weight on the tape. No drama, still positive, but you see the move in the last 25 minutes. Outside of that, in the bond market, yields still higher by almost a basis point on a 10-year to 0.777%. Up later, 1/3 of the negotiations on Capitol Hill will be on Bloomberg TV and radio. House Speaker Nancy Pelosi coming up a little bit later on Balance of Power with David Weston. Looking forward to that on Bloomberg.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
From London and New York for our audience worldwide, good morning to you all. About 1 hour away from the opening bell in New York. We do fade a little bit on S&P 500 futures. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Up 10 on the S&P. We advance a third of 1%. With economic data this morning, here's Lisa.
Yeah, we're looking at housing starts, which have been really, really strong, coming in a little bit below estimates with 1.415 million housing starts versus the 1.465 million. Basically, momentum cooling a little bit, particularly as we see the wildfires dent supply and demand. Building permits seeing a different story, the opposite, actually coming in ahead of expectations, 1.55 million. John, this really highlights, again, the K-shaped recovery that we've been seeing, the idea that people who have the ability to go buy a home are doing so, and they're taking advantage of very low mortgage rates, even as you see evictions and rent delays, et cetera, picking up in other regions, just sort of highlighting the dissonance of this economic recovery.
What did we call it? The Hamptons-Manhattan spread? Is that what we called it?
Westchester,
Lisa?
Manhattan
Westchester.
spread. Yeah, Greenwich you could use as well.
Forgive me.
It's okay. You're forgiven.
The president's speaking right now. Some headlines coming from the president of the United States. He wants a bigger stimulus bill than the Democrats. We'll see if Speaker Pelosi will change her mind. Goes on to say that he expects Leader McConnell to be on board if there is a relief deal. Problem is, Tom, we haven't heard that from Leader McConnell, have we?
No, it's fascinating. I think there is a headline in there from the president on Speaker McConnell, on Senate Majority Leader McConnell, I should say, excuse me. And, you know, I'm searching for it right here. We can do that on the Bloomberg terminal on radio and television. Trump expects McConnell to be on board if there's a relief deal. Okay, John, that's what the headline says.
He expects him to be. Like I say, is Leader McConnell on board with it? Different question. We need to hear it from Leader McConnell.
And the money quote from the gentleman from Kentucky, he would like to, quote, make law if we move forward. We'll continue to monitor the president on Fox and various other administration officials using their network, including Fox Business this morning. We'll monitor that for you as we do at Bloomberg. Right now, this is a joy. As we come out of U.S. economic data, somewhat fragile, the mysteries of the American economy, the great European optimist joins us. Eric Nielsen has pieced together a career of battling the doom and gloom crew at UniCredit in London. He writes a Sunday evening note. Even Pharaoh, knee-deep in a bar in Mayfair, reads Eric Nielsen's note when it's published 7 p.m. London time. We're thrilled that Eric Nielsen could join us right now. Eric, is there fear of a persistent economic slowdown, or do you just assume with pandemic solution, with vaccine, we get back to some kind of normal?
Thanks, Tom. Thanks for that introduction. Yeah. No, I do fear that I don't fear a 10% drop in GDP, but the second wave will cost on GDP without a doubt. And I worry a little bit about stimulus fatigue in some countries in Europe, particularly in Southern Europe, where there is still this fear about public debt, and that would be sad if it were to scar the economy more severely.
You know, Eric, I don't know if you heard it yesterday, but Janet Yellen was absolutely on fire on the show yesterday. I'd never seen a Yellen, or frankly, Eric Nielsen, a central banker like that. She was heated about the need for stimulus. Do you have a Euro optimism that you're going to deliver the trillions necessary?
Yeah, I mean, I think on balance we won't get as much as I would like, and maybe as Yellen would like, but in Europe we will get a good deal. There's But remember, we are already coming from a hole because the program that were introduced earlier this year to protect labor are all set to run out early next year. And that would impose like a 1% of GDP fiscal tightening unless they are renewed. And they will be renewed, but we would like to see more, right? Ultimately, you need the national governments in Europe to bridge us to the end of next year when the big pandemic, the next generation EU money starts to flow.
How worried are you, Eric, right now about the loss of momentum in this economy, even before these extra restrictions? Seeing the PMIs where they are, where they're expected to be on Friday, and this comes before we shut down places like Ireland in the last 24 hours, Eric. Help us understand what is going on with this economy at the moment.
Yeah, I mean, Jonathan, that's exactly right. We all talk about the second pandemic, but they were slowing beforehand already. We could see this. And if you look at European data, for example, household savings were up at 26% in the second quarter already. So you have a lot of precautionary saving or forced saving or what have you. So you really have a retrenchment of the private sector. Investment don't come so long as you don't see a prospect for spending or selling your products, if you will. So you have to stimulate this domestic demand from the consumption side. And that's tricky when people are scared. And it doesn't matter that much, in my opinion, at least as we can judge, doesn't matter that much of whether it's formal lockdown or it's just the pandemic expanding in and people get scared. So you don't go out and spend. So I am worried because it's not clear how exactly you get people out and spend the money and get the economy going. But at a minimum, protect the vulnerable in society, protect the sectors that should not go under, or anyone. Who knows who should go under, by the way, right? So protect the economy until this beast of the pandemic is behind us, I would argue.
So, Eric, it's often frustrating for me to listen to conversations about Europe because we often conflate two issues, redenomination risk and just the recovery. And I think we've done a lot in Europe over the last few months to reprice redenomination risk. That step forward towards fiscal integration. What I can't get behind is the optimism around the recovery. Do you actually think we can engineer something in Europe that leads to higher interest rates, something we failed to do in the last cycle?
That's a big, big question. The short answer to that is no, because I think the low interest rates reflect big structural demographic changes over the last 20 years. I'm a big believer in the Goodhart book from earlier this year on the great generational reversal. And I think we will have to wait 5, 8, 10 years before we really get those changes, the reversal or the slowdown of globalization, and we're over the top on the demographic stuff. So so I think the best you can do now is be sure that you replace the retrenchment of the private sector with public debt. End of story. The central bank buys it, and you shouldn't worry too much about it, and keep the economy floating and growing ultimately. This pandemic will be over and behind us in a year or two, without a doubt, right? And you just don't want too many scars in the economy at that time.
Eric, when you talk about scarring, I think about these small businesses that have disproportionately been hit by the pandemic, disproportionately gone out of business and account for a disproportionate amount of employment, both in Europe as well as the United States. How big of a concern is this to you in terms of the potential scarring in the global economy?
That's exactly the concern I have. You hit a spot on. I go crazy when I hear people talk about the creative destruction with some sort of a enormous self-confidence that they think that this gale of the pandemic is going to somehow clean out those who shouldn't survive. Now, are we going to let 2/3 of the airline industry go under or something like this? Or do they need support, or do they deserve support? What about all the small ones that don't have PR people who get on Bloomberg TV to tell their story? What about those without the lobbyists? The small restaurants, the small businesses? These are the people that you have to support. The other ones will get through, and they also need support, of course. So my whole point here is this is not market forces that should clean out the weaker, if you will, in a market sense, and so we can innovate. This is a pandemic. It's a health crisis, and we are, as a friend of mine said, this is not a recession. It is the patient has been put in an artificial coma until it's over. and if you need to look after the patient. So and no more deserving that than all the smaller ones who don't get a voice in the bigger community.
That is the argument against creative destruction right now. Eric, we don't do the PR voices. Don't worry. Come on, Eric Nielsen, Avuni Critic. Great to catch up, Eric. As always, thank you, sir. Front page of the Financial Times this morning, guys. There you see it above the fold. Eurozone heads for a €1 trillion deficit. And the appetite to keep on pumping this debt out and do all of this fiscal stimulus. Let's have a look at what the bond market's been doing. €1.5 trillion in new record bond issuance this year alone on the continent. There was an issue this morning with massive demand out there for it. And I think Joe Weissenthaler Bloomberg put it perfectly. This isn't about the capacity of the bond market to provide more fiscal stimulus. This is about the political will. It's about political capacity, Tom. And I think that's the key issue at the moment.
Well, it's a political will, but also the political will down the road of how do you get about it. We've got Joe Stiglitz coming up, and it's simple. He owns a study of the growth rate, and the growth rate is a key idea here.
Looking forward to catching up with the Nobel laureate next on this programme. Joe Stiglitz from London and New York alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro, and I'm running away to fly solo at 9 a.m. Eastern on my own. Tom, it's been great. We'll do it again tomorrow.
Do you have a mute button with
wait.
yourself at 9 a.m.?
I will mute you for the rest of the day when you try and ring me at some absurd time tonight.
Got that right.
For no reason. This
there's a time
is Bloomberg.
shift?
With the First One News, I'm Rishka Gupta. House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin are trying to beat the clock. They're narrowing their differences on a coronavirus relief package. But Pelosi has said that by the end of today, there must be clarity on the bill if it is going to be passed by Election Day. Pelosi told House Democrats there are still significant areas of disagreement. And it's a victory for Democrats in a fight over ballots in a battleground state. A divided Supreme Court allowed a 3-day extension for mail-in ballots in Pennsylvania. Now, Republicans wanted to reinstate the state's requirement that the ballots must arrive by 8 p.m. on election night. And President Trump is turning Anthony Fauci into a scapegoat. He spent the day maligning the government's top infectious disease expert as an idiot, the president said, without offering proof that if he had followed Fauci's advice, hundreds of thousands more Americans would have died. And there's a price the European Union has to pay before trade talks with the UK can be restarted. The British government is holding out for more concessions that may involve a public statement to make it look like the EU is conceding or emphasising that the two sides are sovereign equals. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance, Lisa Abramowitz and Tom Keene. Of course, John Farrow with us always as well. Bloomberg Surveillance, a really, really important moment here. We've had a great theme over the last number of days with all the politics that we're talking about to, of course, address the greater economy. Yesterday, it was fascinating not only to see Janet Yellen, but to see a Janet Yellen absolutely on fire over the need for action by Washington. Let's listen.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis, but the fiscal support has now lapsed.
And they're all tied together. Janet Yellen there, the 15th chairman of the Federal Reserve System, and joining us now, someone who had to sit there with student Yellen and straighten her out. Joseph Stiglitz joins us, the Nobel laureate from Columbia University. Joe Stiglitz, what was Chair Yellen like as a student?
She was great. She was one of the best students I had. She was one of my students in the very beginning of my teaching.
Well,
and she lived up to her promise.
And I'll say the least. Probably she taught you some things while she was your student as well. She was that acclaimed without questions through all of her work. Joe Stiglitz, I want to dovetail in here the political season with the economics at hand. Joe Biden is a certain kind of Democrat. If he takes the trophy, can the Democratic Party find a middle ground, a common voice with the rest of America to actually pass legislation and make policy?
Oh, absolutely. I believe actually there's a broad consensus in America on a whole wide range of issues. And I think Biden is in a position to create that middle ground to get that common agenda adopted. For instance, we're concerned, everybody's concerned about healthcare, the cost of healthcare, access to healthcare. The proposal of public option is a good way of getting it to everybody.
Joe, you're looking at this with your new book, People, Power, and Profits, Progressive Capitalism for an Age of Discontent. Joe, you brought that word, you brought our Steinbeck over to the American economic mind with discontent. This discontent now is absolutely extraordinary. What can a legitimate Biden policy accomplish? What's the first order condition you see?
The first order is getting the economy going again. And Janet was absolutely right. There is right now a need for fiscal support, especially at the bottom. You know, people talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time. The unemployment rate among certain groups of the population are very elevated. So that's one thing. But there are certain sectors of the economy that are badly afflicted, and they need assistance. For instance, I'm in one of those, the education sector, research sector. And those are sectors that are going to be vital to the country's future. If we let those weaken, we're not going to have, we're going to have a weak economy now, but we're going to have an even weaker economy in the future.
One thing we've been talking a lot about, Professor Stiglitz, in the past few months has been GDP and how it's going to go down dramatically on the heels of the pandemic. And you were recently quoted in a Bloomberg article about how this is not a great measure of people's well-being. You also said high prices in the stock market are an even worse indicator of societal well-being. Focusing on the wrong things can lead to taking the wrong actions. What wrong actions have we been taking up till now?
Well, the focus on the stock market really is perverse because we know underlying the growth in the stock market are a few companies, Silicon Valley, the digital giants have been doing very well as a result of their monopoly power. People going in the stock market because interest rates are so low, returns of bonds are so low that they're piling into the stock market. And wages are not doing very well, and that helps the stock market. But all those are things that are weakening our economy. So it's almost perverse. The strong stock market is almost a sign that things are not going well in other parts of the economy. So precisely, we need to focus on the role of market power in our economy, the low wages, the fact that at the bottom, wages are the same as they were 65 years ago, adjusted for inflation, and most importantly, we need the aggregate demand going up so that the economy, so that their jobs are there for all Americans. And that won't happen if we don't have that fiscal stimulus that Janet was talking about yesterday.
This is an incredibly important point, the idea that the prices on stocks could actually be evidence of something counter to what may be the healthiest for the underlying economy. Do you think that the response from the Federal Reserve, the U.S. Treasury Department, and Congress has actually increased the disparity in access to funding for small and larger companies at a time when we see unprecedented bankruptcies among smaller businesses?
Well, that's actually very many aspects of what you just raised. There was a program created at the very beginning called PPP that was intended to get money to small businesses. but it was very badly administered, and it did work. It got money to the richest of the small businesses, many of whom were owned by very, very rich people. So the intent was perhaps good, but the way it was executed by the Trump administration and by the banks, quite frankly, was a disaster. But more broadly, the monetary policies that we've conducted since the great financial crisis, 2008, of keeping interest rates very low has stimulated the growth in the value of equities. And the equities are overwhelmingly owned by the people in the top 10%, top 1%, top 1/10 of 1%. And it's absolutely unambiguous that that monetary policy has increased wealth inequalities.
Joe Stiglitz, I was talking with our Sally Bakewell, who's really, really looking at the great divide that we see on the streets of New York, or frankly, I think across any of this nation, of small business flat on their back. We have financialized the world. There's no question we've done that for the benefit of the upper X% or others. How do we get back to it? How do we escape and definancialize in a constructive way?
Well, I think, first of all, we have to do three things. We have to rewrite the rules of the market economy. There's too much market power at the top. We talked about it in terms of the Silicon Valley giants, but there's a lot more throughout the economy. We've weakened the bargaining power of workers, and that has contributed to inequality. We have rules that have led to that excessive financialization that you talked about before. Secondly, we have a tax system where those at the very top actually pay a smaller percentage of their income than those down below. You know, Warren Buffett actually complained about it, saying, it was wrong that he was paying a lower tax rate than his secretary. There are a lot of wealthy people who recognize that this is actually bad for our economy and morally
Yeah, but
wrong.
Joe, I mean, if you sum up the taxes that the rich guys are paying, it's a pretty high marginal bracket. It may not be, Rockefeller 72% and all that, but if we sum every tax up, it's there. How do we definancialize and deploy capital to people starving for capital? Apple Computer is not starving for capital. They can get any billions they want. What about the small business person on a corner in Tulsa, Oklahoma?
Well, that's where we have to refocus our banking system. Banks were always at the center of providing capital to small, medium-sized businesses. If you're a small business, you don't go raise money on the capital market. You go to your bank.
Yep.
And the problem is that the banks over the last 30 years have focused their attention on things like issuing derivatives, CDSs, trading commodities. They found a lot more lucrative ways of making money. Some of it actually market manipulation. So if we stop some of their bad activities, market manipulation, predatory lending, and encourage them to do what their mandate is, which is lending to small businesses, I think it would actually create much more opportunity.
I mean, Lisa, this is the heart of the matter. I'm just old enough, unlike the ancient Stiglitz, who really, really remembers this out of Gary, Indiana. But Lisa, there actually was a time where you did business with your local bank, or maybe the regional bank.
Yeah.
And it's evaporated.
And actually, the regional banks, anecdotally, have been pulling back on credit. Professor Stiglitz, I'm not going to refer to your tenure or in terms of teaching or anything that Tom was talking about in terms of ancient history. I will say, though, going forward, how does the economic profession, how do you as a Nobel laureate get your voice heard to the degree that it needs to be heard by policymakers who say economists have gotten it wrong numerous times? Why should we follow a theory when free market economics has led to the power of the United States over the long term?
What actually hasn't been free market economics has led to the success. If you look at all the innovations that have been the basis of U.S. success. All of those innovations have been supported by the government. The internet, the advances in medicine that we're all looking for. Who did the research that led to DNA? Who did the research that led to all the major advances in biology? It's the government. So one of the things I call for in my book, People, Power, and Profits, is recognizing the success of the United States has in the past been based on a balance between the market, the government, and civil society. We lost that balance beginning with Reagan, that said the government was the problem. We now, in this pandemic, have seen that an ill-prepared government is not there when we need it. And I think the strongest argument for what I called for in my book, People, Power, and Profits, for a new social contract with a new balance, has been precisely the failures that we've just seen in this pandemic.
Just Tickets, we've got to leave it there. Thank you so much, and particularly thank you for your comments on Chair Yellen early in this good discussion. The laureate from Columbia out with a new book on people, power, and profits. It has been an extraordinary day. Lisa, really, I guess it's right on cue. Things heating up. There's no other way to put it.
Yeah, well, we're getting very close to the election, and really the conviction in markets is sort of shocking, given where we were just a few weeks ago with people counting on several months of a contested election. That fear no longer in markets.
Yeah, I wasn't talking about the markets. I was talking about Faro. I mean, Faro just fell apart. There's no other way to put it, right?
The mute button did him in, Tom.
I mean, he just fell apart. Well, we're going to do this tomorrow again as well, which is fun. We'll see you at 6 a.m. Tomorrow on the simulcast on Bloomberg Television, and of course on TV and radio from 7 to 9 a.m. as well. The interview of the day, Ted Cruz just out on Fox, skeptical on stimulus, the other side of the aisle, the other side of the building. Speaker Pelosi in conversation with David Weston. Look for that, I believe, in the noon hour, scheduled today. Futures up 15, Dow futures up 120. Stay with us through the day. This is Bloomberg Radio and Bloomberg Television.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
From New York and London, for our audience worldwide, good morning, good morning. This Tuesday morning, equity futures up 12. We advance 1/3 of 1%, and we begin with the big issue. 2 weeks to go. Former Vice President Joe Biden urging unity in North Carolina.
I'm running as a proud Democrat, but I will govern as an American president. No red states, no blue states, just the United States. And you, too, have a sacred duty to vote, and it matters.
President Trump pushing for a different kind of unity, a bipartisan deal for another stimulus package.
Nancy Pelosi, maybe he's coming along. We'll find out. We want to do it. I want to do it at a bigger number than she wants. That doesn't mean all the Republicans agree with me, but I think they will in the end.
With time running out on a pre-election deal, Speaker Pelosi seeing signs of progress.
At last, finally, they have come to the table, and we're going to try to get something done. And I try to make tomorrow a time where we would have exchanged all of our differences of opinion so that we can, and numbers and paper, so that we can see. Let's make a judgment. We may not like this, we may not like that, but let's see on balance if we can go forward.
And with the administration and Democrats narrowing their differences, where's Leader McConnell? Well, the president is urging both sides to make an agreement. Senate Majority Leader Mitch McConnell seemingly going his own way, pushing ahead with plans to vote on a smaller-scale stimulus effort that both sides oppose. Let's bring in Kevin Cerulli, Bloomberg Chief Washington Correspondent, for more. Kevin, once again, same story, except this time apparently there's a deadline. Is there actually a deadline?
Yes, there is. This is the final chance for there to be some type of agreement before the election on November 3rd, Jonathan. Look, I've been speaking with sources on both sides of the aisle, and from the McConnell camp perspective here, they view this as really an opportunity to really represent a wide contingency of conservatives, not just in rank-and-file members and not just from deeply conservative districts and states across the country, but also in the business community who are a bit apprehensive in terms of injecting this much stimulus into the economy. And they view it really not as an opposition to stimulus, but this much stimulus, upwards of $2 trillion. Now, from the president's perspective, he feels that this would be able to benefit not just the economy, but as well as many of the Senate races that are in play. Case in point, North Carolina, where which is a much more purple type of state, a battleground state where Senator Tom Tillis, an incumbent Republican, is up for re-election against Cal Cunningham, a Democratic challenger. That is a brawl of a political battle in that state. And a new ABC poll has Joe Biden up 2 percentage points to 48% to 46% respectively. Well within the margin of error, but a good illustration of how stimulus is impacting not just the presidential level, but also the state level as well.
Kevin, the president saying earlier this morning that he expects Leader McConnell to be on board if there is a relief plan. Now, my question is a simple one. Have we heard that from Leader McConnell? Has he given any suggestion whatsoever that he would entertain anything like the $2 trillion that's being discussed on Capitol Hill?
He has not. And from Leader McConnell's perspective, he feels that by going on board with the upwards of $2 trillion bill, that would put in jeopardy some of the other conservatives and really even stoke the flames for a grassroots political uprising of sorts akin to what we saw after the 2008 collapse with the rise of the conservative Tea Party movement. So they're looking at this from two different perspectives, the president's camp as well as Leader McConnell's camp. But it's you know, again, still a question. This deadline of November 3rd from Leader McConnell's position feels a bit artificial in the sense that everyone agrees that there should be more stimulus. It's just a matter of how much and when that comes. But it's a gamble because the political capital calculation changes after the election.
Kevin, great to catch up, sir. 2 weeks away from the election, 2 days until a debate in Nashville, Tennessee. Here's the price action 25 minutes away from the opening bell in New York City. Equity futures were much higher than where they are right now, up 13, up 0.4%. We rolled over about an hour ago on a story from the Wall Street Journal and some headlines just dropping across the Bloomberg. For a little bit more clarity on that developing story, here's Abigail.
The Bloomberg terminal right now, and we have Google accused by the U.S. The U.S. is filing an antitrust lawsuit against Google in federal court. This is considered to be the most significant antitrust action in decades. And of course, Google is being accused of using their monopoly type power, 90% of the U.S. search market, to the disadvantage of competitors. Google, John, is not doing all that much on this news right now, down about 0.4% in the pre-market. As other headlines come out, we will, of course, be breaking those. But again, the U.S. is suing Google in antitrust proceedings.
Abigail, thank you. We'll touch base with you in about 25 minutes' time on that story. Thank you very much. On the politics, JP Morgan's David Leibovitz warning investors about getting too distracted over the policy debate. He writes the following: markets seem to be entirely focused on the outlook for policy, which is fair given the central role it will play keeping the recovery on track. However, messages from the economic data may be as, if not more, important. David, I'm pleased to say, joins us now. So, David, let's talk about it then. What's the message from the economic data right now?
Well, it's interesting. You know, when we look at the numbers we got last week on retail sales and industrial production, you saw a retail sales report that was very strong, but some industrial production numbers that slipped a little bit. And I think that the message here is that, you know, when we look at the economy, the easy money has been made. The easy gains are now behind us, and the recovery is going to be more challenging from this point forward. We have noticed that there's been a pretty tight correlation between income growth and retail sales. And so my biggest concern is that in an economy which is 70% consumption, you begin to see that income, which was coming from the government, roll over. Retail sales are going right along with it. We are already expecting the pace of economic activity to slow in the fourth quarter, and the lack of more stimulus really just adds insult to injury.
You do realize, David, when you say the easy money was being made, hardly anyone felt like that was an easy moment coming out of March. Where was the easy money, David, and did you make it?
So I think, you know, when we think about the equity market, obviously the Fed's injection of liquidity has been significant and pushed, you know, the high quality growth names to near record highs. My point rather was with respect to the economy. And if you think about the unemployment rate, just as an example, the unemployment rate spiked to a level of 14.7% in April of this year, and has since come down to a level of 7.9% in September. I mean, the speed with which things have moved has been significant. And my point was rather that going forward, both the recovery and gains in the equity market, I think, are going to be more challenging than has been the case up until this point.
I want to ask you about potential downside as well. This came from Mike Wilson of Morgan Stanley. He wrote the following: with so many uncertainties over the next month, we think another 10% correction from Monday's highs is the most likely outcome in the near term before this bull market can resume, at least at the index level. Do you get the feeling, David, given all the uncertainty you think we still need to clear, that a period of consolidation is on the cards here?
You know, I wouldn't be surprised to see markets consolidate a bit, you know, as we get closer to the election, and then potentially in the aftermath of the election, depending on how clear the result is. You know, we did see that consolidation earlier in the fall, kind of after those all-time highs at the end of August. September was a little bit of a struggle. I wouldn't be surprised to see that again going forward. Again, you know, when we look at the valuations of the big mega cap tech stocks, which have obviously done so well, you know, their elevated positioning is much more neutral as opposed to everybody being underweight equities, which was the case over the past couple of weeks. I think, again, you know, we're getting to a point where the rest of the market needs to participate. participate. It can't be all about 5 or 10 names in the S&P 500. And unfortunately, the rest of the market has a much greater cyclical orientation, which is going to be, and their outperformance is going to be driven by the economy coming back online. And so kind of bringing it back to where we started the conversation, if we are getting to a juncture where economic activity is slowing and the policy support that's so essential to keeping things on track isn't necessarily there, I wouldn't be surprised to see some consolidation, because in order for markets to continue grinding higher, there needs to be participation from more than just the top 10 names in the S&P.
Well, David, let's think about when that moment peaked earlier this year. First week of June, 10-year nominal yields peaked. Post-pandemic, first week of June. S&P 500 banks, post-pandemic, peaked first week of June. What was it about that moment contrasted with now, David? What's the difference? Where did the optimism go? And what's hanging on it?
So I'm not sure that the optimism has necessarily disappeared. Rather, I think that the optimism is just somewhat dormant. If we go back to June 1st, we had gone through that first wave of infections in the tri-state area and other parts of the United States like California. We had made it through that. We had begun to reopen the economy, and everybody was feeling very confident that maybe this was going to be a smoother process than a lot of people originally expected. Obviously, then over the month of July and into the beginning of August, we saw that second wave of infection. Markets seemed to shrug it off, hitting those all-time highs towards the end of August. And so my thought here is that, again, this is clearly going to be a more challenging and lengthy process than a lot of people may have expected earlier on this year. I don't think that means that the recovery is going to be short-circuited, but I always come back to the fact that in the United States, more than 80% of private sector employment is in services, and that's the area that is going to remain under pressure as long as social distancing remains in play. And so to get the economy fully back online, the bottom line is we need a medical solution, and there are obviously questions around that. There are questions around reopening the economy, and policy, again, is the bridge that can get us to where we need to be. And so I do think that there's room for yields to move higher and for us to get back to where we were over the coming quarters, but I don't think it's necessarily coming anytime soon, given the logjam that we see in Washington.
David, great to catch up, sir. Always good to see you. David Leibovitz there of JP Morgan, about 20 minutes away from the opening bell. Equity futures up 15. We roll over a little bit on Alphabet. Google down about 1/3 of 1% on that story. Abigail's back with us. Hey, Abigail.
Hi there, John. Well, yes, a really significant story developing here. This is the U.S. is filing a lawsuit against Google, an antitrust suit, the most significant in decades. This, of course, saying that they have abused their market power. They do, of course, dominate 90% of the U.S. search market. So the U.S. is filing an antitrust lawsuit against Google in federal court, and again, considered to be the most significant antitrust action in decades. It's not exactly new, John, because we've seen moves in this direction over the last couple of years, but it does feel like it's coming out of nowhere. Nonetheless, the stock down just about 0.4%, so investors perhaps thinking that it won't happen all that quickly. In addition, Alphabet on the year up just about 14% relative to Apple, which is up much more. So in some ways, you could make the case that this stock has been penalized on the year, perhaps in anticipation of something along these lines. Turning to other movers, IBM is down 3.8%. Their quarter, they did beat, but growth on a year-over-year basis declining. The outlook not great. The cloud business not great either. Intel, of course, is unloading or selling its storage unit to South Korea's Hynix for $9 billion. And P&G, Procter & Gamble, popping on a very solid quarter. They have also raised their full-year view, appearing to benefit from the pandemic. But the big news on the day, of course, is the U.S. filing that antitrust lawsuit against Google in federal court.
Abigail, thank you. More to come. Coming up next, record-breaking crowds casting ballots throughout the country with just 14 days remaining until the U.S. election. That conversation up next with PGIM's Greg Peters. Looking forward to that from London and New York. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's time to restore America's soul. It's time to rebuild the backbone of America, the middle class, and this time bring everybody along, no matter your race, your age, your religion, your gender, ethnicity, or disability. We can do this.
With your vote, we'll continue to cut your taxes and regulations, maintain energy independence, which we have now, strengthen our military, support our police, protect our Second Amendment.
President Trump and Democratic nominee Joe Biden campaigning ahead of their final debate Thursday night in Nashville, Tennessee. The former vice president leading by nearly 9 percentage points, according to the latest Real Clear Politics polling average. This with just 14 days remaining until the general election. For more on how the market's pricing this, here's Sarah Ponzek. Hey, Sarah.
Hey, John. And that 14 regular days translates to just 10 trading days. So certainly investors are gearing up, and this is showing itself in the volatility markets. For example, if you look at the VIX, implied measures of stock volatility, we've seen relatively subdued volatility lately. Sure, just south of 30, relatively high. However, not much jumping around. However, in recent days, last week, if you look at the Bank of America Move Index, a measure of implied volatility for the Treasury markets, we saw the largest jump since March from record low levels. Now, analysts say that this is really pricing in the same thing, which is fewer fears of a contested election, more odds, higher odds of a Democratic sweep, that so-called blue wave, and therefore more fiscal expansion. Now, as TD Securities did highlight this morning, we're seeing this in the FX and rate markets too. We've seen a resumption of that bear steepening in the yield curve. If you look at the spread between 2-year and 30-year Treasury yields hovering right there at the highest since 2017. Meanwhile, we've also seen a resumption of the downward trend in the U.S. dollar as we have seen odds of higher inflation picking up once again. That you see the Bloomberg U.S. dollar spot index in that orange line right there. Now, on the equity side of the equation, we have seen more and more calls for value outperformance from the likes of JP Morgan and Goldman Sachs, for example. Now, we have seen slight outperformance this month, value beating growth. However, as you can see here, value has still greatly lagged growth for this past year on a year-to-date basis and well beyond too. It's been very well discussed. Well, will we see a turn? But what do we expect in the short term? 2 weeks from today, that is Election Day. And in past years, the past 10 elections, in the 2 weeks prior to Election Day, we have seen an average gain of 1.5%. Now, 3 episodes have seen declines, 7 episodes have seen gains. But one thing is very clear, John, and that is that the countdown has really begun.
It has. 2 weeks to go. Sarah, thank you. 2 weeks until the election, 2 days until that final debate. PGIM's Greg Peters weighing in on the election's impact on markets. He writes the following. Voters are saying the winner of the presidency matters more than at any point in the last 20 years, albeit less so for the markets. Regardless of the election, the golden age of credit thesis largely holds. Greg's with us right now. Greg, let's start there, that final point. What's the golden age of credit? What's the thesis, and why does it still hold?
Yeah, so the thesis of the golden age of credit is quite simply that bondholders are prioritized over equity holders. And so March's near-death experience for lots of these companies and industries really forced company management to focus on bondholders. And what does that mean? Well, that means pulling back on share buybacks, pulling back on CapEx, and pulling back on dividends, and prioritizing debt paydown and generating more free cash flow. So it's really kind of as simple as that. And so I think this is a multi-year, multi-quarter thesis, not just a short-term thesis.
Are you actually seeing leverage come down, though, Greg? And do you expect it to come down in the future?
Well, just coming down organically, right? Because it spiked in the first quarter just because there was no cash flow. And so it is coming down organically just by virtue of these companies opening back up again. But the real important story is you're seeing a refitting of the debt maturity wall and the coupons. And so there's been lots of talk about this record issuance in the corporate bond market. And indeed, that's been true. But if you dig deeper, what's happening is that companies are actually paying down higher coupon, shorter maturity debt and terming it out with lower coupon debt. And all else equal, that really makes the balance sheet that much better. So I think that's the story. I think we're setting ourselves up for when the cash flows do actually start to turn in a more sustained, meaningful way, that these companies will have the ability to delever.
So, Greg, this might sound like a bit of a funny question, so forgive me, but if they're managing the maturity profile and people are bidding up the debt when it comes to market, yields fall, better maturity profile, pricing in longer dated assets onto the balance sheet, Greg, does it become a momentum trade? Do people just start chasing the same credits because they know yields are now lower, the maturity profile's improved, therefore the credit has improved, therefore chase it again? Does it start to feel like that?
Well, Jonathan, what you defined is really, in essence, QE, right? So, yes, I mean, what you're seeing is that with real yields being negative and interest rates at zero, you're forcing investors into all these types of risk assets, including credit. So, yeah, what I do think you're forcing investors out of cash and safer assets into more risky assets. And ultimately, that'll play out, but I don't think that's going to play out over the near term. But, yeah, I mean, you're describing QE, Jonathan, and that's what investors are following.
So here's my question then. If you're being forced to buy riskier assets, why is that the golden age for credit, Greg?
Well, force is a strong term, Jonathan, but I think
your words.
You are being gently nudged, not so gently nudged, because the reason why we're in the golden age is because your alternative is zero or negative real rates, and that matters. And quite frankly, let's go back to the fundamental thesis, which is these companies are actually repairing their balance sheet. So as a credit investor, you benefit from that fundamental improvement. So put the QE on the side. The tried and true way of outperforming in credit is when company management is behind you from a credit investing standpoint, and that's where we're at today. So I think that is actually more important of a thesis or the point of the thesis than being forced in because of QE. QE is just the accelerant, if you would.
Sounds like a golden age for the issuer and not the buyer, but that's a different story. Greg, just a final question from me. This election, you say, is more about sectors and not a broad market macro story. Greg, when you say that, what do you mean by it?
Yeah, so I have been surprised, Jonathan, at how quickly the market has latched onto this blue sweep, where if you go 3 months ago, that was kind of the dire outcome. So it has had market implications. So I don't want to say that it doesn't completely have zero implications. But I do think sectorally is where the rubber meets the road. And so we're focused a lot on energy, where there's a kind of universal negative view around energy. I don't think that's right. You'll see the consumer segment very different than some other segments. So to me, it's about the sectorial shifts. And if you believe this blue wave idea and thesis, then there will be a clear movement towards more green initiative, ESG, and those types of things, which I think is widely known at this point. But then what's also important is different tax around the consumer itself, namely student loans and other things. So to me, I think it's around kind of how do you reposition your portfolio within the market, not an overall broad market view.
Greg, always an education. Thank you, sir. Greg Peters there of PGIM. Coming up on this programme, the analyst action you need to know, the morning calls. Up next, this is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Tunggu, señor.
About 5 minutes away from the opening bell, futures up 0.4%. Let's get you the morning calls. Some of the analyst recommendations on Wall Street this morning. First up, Piper Sandler upgrading Workday to overweight. The analyst expecting a promising 2021 with several catalysts driving subscriber growth. Citi raising its price target on GM to 57. The analyst seeing upside heading into quarterly results. And your third and final call from Jefferies naming Snap one of its top digital advertising stocks ahead of earnings. The analyst seeing a number of opportunities to improve its monetization of products. They're 3 of the calls. Up next on this programme, much more on the earnings front. Netflix, after the close, the commentary from MoffettNathanson's Michael Nathanson right here on Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Don't shoot the messenger. Apparently, there is a deadline on Capitol Hill today to get a fiscal deal done before the election. I have no idea if the deadline is actually a deadline, but we're told there is one. That's all I'm going to say. Futures up 12. We advance 1/3% on the S&P 500. Nasdaq futures up 18, up a little more than 1/10%. There's the opening bell. Switch up the board in the bond market. 14 days away from an election, 2 days away from a final debate. Yields higher, up a basis point to 0.78%. In foreign exchange, Europe looking messy. The euro doing okay. Euro dollar 118.15, up 0.4%, and crude just about holding on to a 40 handle, down 1% on the session, $40 and around about 40 cents. That's the cross-asset price action this Tuesday morning with your movers at the market desk. Here's Abigail.
John, let's start out with this morning's big stock story, and that, of course, is the fact that the U.S. is filing an antitrust lawsuit against Google in federal court. It is expected to be the most significant antitrust action in decades. The company, of course, is being accused of abusing its power. They do own 90% of the U.S. search market. You can see Google off just slightly. As for the effect on the other big tech companies, Facebook, Amazon, Apple, they are basically higher. Apple down or up just slightly, basically flat as well. But there have been lots of shots across the bow on this one, with many of these big tech company CEOs appearing before congressional hearings over the last few years. And you could perhaps, John, make the case that some of this is priced into Alphabet. Since April of 2018, when Mark Zuckerberg first went to Congress, Alphabet is up 38% relative to Facebook, up 70%, and Apple up 166%. So investors may be not entirely surprised about this. Plus, timing, how long will this take? So again, right now, tech investors not all that concerned, at least right now. As for some of the other morning movers, let's take a look at some of the other stocks moving, including Philip Morris, down about 0.6%. They beat and they raised the forecast, but investors not liking it at this point. We'll be digging into that more. Travelers up 2.6%. They beat estimates on better underwriting. And then finally, Albertsons, the grocery store company, really popping sharply higher, up 6.5%. They beat. They also raised the view. It looks as though that grocery store chain is doing well in the pandemic, John.
Abigail, thank you. Thank you very much. 2 minutes into the session, equities up about 1/3% on the S&P. Every single sector in positive territory this morning. Information technology, middle of the pack, still up by about 1/3%. But this is the developing story for the sector right now. What is happening with Google? For more on that, Kaylee Lyons joins us. Hey, Kaylee.
Hey, John, well, it may finally be the day of reckoning for Google. We've long awaited this antitrust lawsuit, but finally was filed in federal court by the DOJ, and 11 Republican state attorneys general also signed on to the complaint. The suit alleging that Google has violated antitrust laws by engaging in anti-competitive practices and abusing its market power as the world's largest search engine. Now, of course, Bloomberg had reported previously that the suit was arguing that because Google controls 90% of the global search market, that's because it is the default search engine on many web browsers, including those on Apple products, a privilege that it reportedly pays billions of dollars to Apple for. That, in turn, the argument goes, creates barriers to entry, meaning it's less likely that others can compete, and that harms consumers. Now, of course, Google's counter-argument to this is that because most of its services are free, it doesn't create any price problems for consumers. And it also says it faces plenty of rivals out there. Now, of course, because Google is so dominant in search, that in turn makes it dominant in the global advertising market. More eyeballs mean more advertising dollars. And Google, as you can see here on this chart, dominated about 36% of global advertising revenue last year. And it actually is facing a separate potential suit from the Attorney General over in Texas on that digital advertising market. Now, as far as this DOJ suit, John, it could take a year before it actually reaches a trial if it isn't settled beforehand. But I should note that our analysts here at Bloomberg Intelligence note while this is significant, again, as Abigail said, the most significant antitrust monopoly suit filed in the U.S. in decades, just because it creates more scrutiny on Alphabet and on Google doesn't mean that it's actually going to change the near to medium term fundamentals of the company, John.
Kelly Lyons, thank you. Thank you very much. I think that's the story for money market participants right now. They see the headline, they look at the stock. The stock is up by 0.4%, called it a third of 1% higher. And for that reason, you move on with your trading day. Right? Michael McKee does not move on with his day. Bloomberg International Economics and Policy Correspondent. Mike, you think this is far more important than perhaps this price action suggests it is?
Yeah, I think, John, what we're looking at here is the beginning of a years-long effort to take down a lot of the FANGs and maybe break them up. This has been talked about in Washington for years, but there hadn't been sort of a consensus. Now there does appear to be. We mentioned that 11 attorneys general signed on, state attorneys general signed on to this Justice Department lawsuit, but some 46 states are investigating Google. Republican attorneys general signed on to this, but there are Democrats as well who are looking at this company and would like to see some action taken. One of the issues that they have is that Google controls, as Kaylee was saying, the online advertising search market. They basically, in the way that the old movie theaters were vertically integrated, they control everything from who gets to be on there to how much it costs, and they're the middleman who places the ads. And so the argument is yes, the Google search engine is free, but companies that advertise on Google have to raise their prices to you in order to be able to afford that. Now, this is a political effort, certainly, but it does seem to be a bipartisan one. It really doesn't have anything to do with Donald Trump's complaints about unfairness. It has to do with the business practices of what's now become one of the biggest companies in the world.
Michael McKee, thank you, sir. We got lucky this morning, not just because we have Kelly Lyons and Michael McKee, but also because we have Michael Nathanson of MoffettNathanson, who we thought we were going to talk to about Netflix, and I promise we will do that in just a moment, sir. We've got to start with Google. Michael, let's start right here. For investors in this stock this morning, what's your message for them?
Well, John, good morning. I mean, again, as you can tell by the price action, this is long expected. You know, I've heard everyone on Bloomberg talk about this, and the issue is incredibly complicated. You know, so our message would be, we've spent a lot of years looking at this issue. We're not antitrust attorneys. It does fly in the face of antitrust, you know, theory, which is always about price, you know, consumer price harm. But in many ways, Google could be better off if at this late stage in search that they don't pay Apple attack rate to be on Apple, and they just compete without paying TAC. And how many people have, you know, a Microsoft browser but switched to Chrome, right? So I just think their search is so much better than anyone else's search engine. And if all of a sudden the world said, look, no more tying, you know, everyone has freedom of choice on picking their own search engine, they would win. They still would win. So is this. If a company ever gets fully broken up, this stock has been literally underperforming those FANGs for 2 years now, right? It's been an overhang for 2 years. Let's see the complaint. Let's see what they found. These incredibly complicated issues. Well, Michael is saying on consumer harm, the cost of marketing has been staying flat for years because search marketing is so efficient, because you identify someone's intention to do something. And therefore, rather than casting a net far and wide to find 1,000 people who want to lease a new car, if I type in leasing a new car, that's a valuable lead. So I don't really see, by looking at all the ads we studied, that there's been unfair, you know, consumer harm by the growth of search, right? It does. I don't see that in all the studies we have of ad spending, right? So I think it's a really complicated issue. To your point, so today's price action is very, very muted, but I think this is going to take a long time to play out. I really do.
Well, Michael, let's talk about what a long time is. Define that. Give me a time horizon. What are you thinking?
5-7 years, right? Like, you know, Google.
Really?
Yeah, well, Google's pushed back on this for a while. They totally disagree with this. Maybe there's a smoking gun, right? So we don't know what's been found in discovery. You know, maybe there are some smoking gun emails and make incredibly obvious that there's some illegal behavior here. But I think they're going to fight this because I think they don't see their success is based on what they believe is superior engineering, and I don't think they're going to give up on that.
Stock up right now by about 1%. This reminds many people, of course, of Microsoft through much of the 90s. Let's move on to the other story, because I know we've got to let you go, Michael. We've only have a short amount of time with you. I know you're busy. Netflix. You think there's a 99-2000 parallel going on here. Michael, walk me and how and where.
Well, I am one of the few analysts maybe who's still working from the late 99s, 2000s. Basically, what's happening is that people are just moving more and more to price to sales multiples, right? So we've stopped looking at free cash flow, John, earnings, even EBITDA, and we just look at price to sales multiples, right? And anytime these stocks go up, the sell side just raises price targets by changing the price to sales multiple. I saw that in the late 1999-2000 period, where it was just too easy to keep raising price targets. And it feels to me, and I'm not calling the whole market dishonest, but because the 10-year, what'd you say, was 0.78 right now, it's just so easy to look out 5 years and put a multiple on something. But I don't know, it feels to me that clearly we're in a growth momentum bubble. I don't know when it's going to pop, but I've done this job for 20 years, and it just reminds me so much of when I first started and just the ease at which people kind of gave up looking at earnings and cash flow to move to multiples on sales. So that's what I'm referring to, John. I don't know if you feel the same way, but the ease at which people raise price targets on large cap companies is just, to me, astounding.
Well, Michael, my views on this don't really matter. I think what's interesting now is that you work for a firm that has your name in it. And as you know, in the late 90s, if you were sitting on the sidelines watching all of this stuff happen and saying you guys are getting it all wrong, there's a real career risk in that. As you sit on the sidelines right now and everyone says this is the metric to watch and this stock is still surging, what's the inflection point, Michael? Your experience, walk me through it. Be honest, be transparent. You always are. When do things start to change? When do people sit there and say, you know what, the price to sales metric wasn't the right metric? Is it just price that starts to change the narrative? Is it something outside of this sector that readjusts price, high yields? I don't know what it is, Michael, but what changed it then and what will change it now?
Well, there was just at one point there was just a lunacy on 2000, 2001, where basically every single dollar was thrown against those internet stocks, and then other sectors started to perform. You basically need, I believe, and you probably would agree, rates to start rising, yields to start going the other way, people to look at corporate activity, right? So I cover a lot of media stocks, which we don't recommend, but they're trading at 20% cash flow yields, John. Meaning for every dollar of stock price, there's 20 cents of cash flow. We're not recommending them, but at some point they'll be LBO'd, they'll be taken out, and then greed will start looking at things that are just cheap on cash flow. So we don't know when that's going to be, but I would think you look at rates, and rates are not going the right way right now as far as they should. But maybe there'll be a stimulus plan, maybe there'll be a blue wave that will just change the psychology. And then there's M&A and just the fear of missing out on more M&A, right? They just unwind some of these things.
Michael, always great to catch up. Good friend of this program. And I always forget the camera's there when we're talking. Michael Nathanson there of Moffett Nathanson. Lucky I stay professional and don't give my view on stocks like Netflix. I'll leave that to Michael. About 12 minutes into the session, equities up by 0.6%, the Nasdaq up by 0.5%. Coming up, European leaders reviving lockdowns and intensifying efforts to slow the spread of the pandemic. That conversation is coming up next with Morgan Stanley's Matt Hornback from London and New York this morning. Good morning. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
esta manera me gustaría decirle a los empleadores que fueran más humanitarios con los trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
When I stopped doing big meetings, I started wearing masks. So it was at a time when the science was saying, and his key people, Dr. Fauci, were saying, you should be taking these precautions.
Biden wants to lock it down. He wants to listen to Dr. Fauci. He wants to listen to Dr. Fauci. And don't forget, Dr. Fauci, what he said is, no, don't close it to China. I said, I'm sorry, doctor, you're a wonderful man. And he is a nice man. You're a wonderful man. I'm closing it.
Presidential candidates clashing over virus politics in the United States as Europe backpedals, reviving tighter restrictions as leaders grapple with a struggling economy and surging cases. Some of the region's largest cities enforcing stricter curbs, with Ireland returning to lockdown, enacting some of the toughest measures on the continent. Bloomberg's Maria Tadeo joins us now from Brussels with the latest. Hi, Maria.
Well, Jonathan, it's a serious situation. If you look at what the European continent looks like, you are seeing more cases, more countries being affected, but also more restrictions coming into play. And this is where it gets interesting for me. For weeks we had markets taking comfort in this idea that lockdowns were a thing of the past, that we were never going back to the scenes that we saw in March, that if anything, this was going to be very tailored, very, very regional. But if you look at the measures, and if you look at a country like Ireland, they're essentially going back to the measures we had in March, which is pretty much a full shutdown, except for things that you really need, the essentials. If you look at a country like Belgium, where I'm at right now, all restaurants are shut. There's talk of a circuit breaker, of a 2-week lockdown to try to contain those cases that we are seeing now. So I would really point out to those two figures there in those two countries, which really signal that the tone and the mood has really changed over the past week in Europe. The situation has become serious. We've heard it for a number of leaders now, too, in a number of countries, but also this idea that perhaps a regional lockdown, that very small, limited measures may not be enough to contain coronavirus, especially if you counter here that we are headed into the flu season.
It's getting colder, that's for sure. Maria, thank you. Joining us out of Brussels. It is the soft spot in the global economy right now relative to the optimism around it just several months ago. It is Europe. Elsewhere, doing okay. Morgan Stanley's Matt Hornback expecting growth out of the US and China to strengthen the risk backdrop, writing the following. Markets are coiling up in anticipation of the US election. Meanwhile, the global economy is defying the foot placed on it by COVID-19 and the lack of more fiscal stimulus. Once the election and associated uncertainty passes, we expect a risk-on tone to strike with a vengeance. Matt joins us right now. Now, Matt, You're familiar with the research from Mike Wilson. You guys work close together. He's looking in the near term at a 10% correction from Monday's close. And I just wonder, Matt, from your point of view, just piece all of this together, because I know there's a coherent voice coming out of Morgan Stanley as a house over the last several months. Piece together that short-term caution with that medium to long-term optimism.
Yeah, John, the way I would frame it is that we are heading into a period of tremendous uncertainty with respect to U.S. politics. We've got obviously a very important election coming up. We've also got other events around the world, Brexit being front of mind at this point in time. And of course, we have important phase 3 trials with respect to some important vaccines, right? So I would say we're heading into a very uncertain period of time, but this too shall pass. And I think once this uncertainty is in the rearview mirror, it's going to unleash all of the liquidity that central banks have been providing, a lot of which has been essentially saved in a combination of bank deposit accounts and money market funds. So we think that once we get into the new year, that liquidity will make its way around high quality markets, and that will boost prices, broadly speaking, John.
So, Matt, one thing you have done is pushed your more constructive macro view through the bond market, short treasuries, long bonds. Have you taken that trade off now, Matt, or is that still on?
No, John, we still very much prefer owning duration in Germany over duration in the United States. We think that the risk reward of that trade is very attractive. It plays both off of the supply dynamics that we expect will accelerate through the next several months. And it also plays off of just the uncertainty with respect to COVID-19 that, as you just mentioned, was really increasing in Europe, not as much in the United States.
So we've had the equity call, the bond call. Let's layer on the FX call. Can you reconcile that with a stronger euro right now, Matt? Because there's some of the calls I'm hearing right now, even with everything you've just said.
Yeah, John, we have been more neutral on euro dollar over the past couple of months. As you recall, we were quite bullish on the euro earlier this year. And once we got up to about 118, 119 on euro dollar, we moved to a neutral stance. And since then, it's been essentially range trading in a sideways pattern. We do think as we make our way into the new year, John, once we have more clarity on vaccines, we will see the euro continue to appreciate versus the dollar. Or said differently, we expect the dollar to depreciate against a broader set of currencies, of course, including the euro. That is a trade that we think will accelerate as we make our way into the new year. But of course, part of that, John, depends on the outcome of the election. If we end up getting a blue sweep, which is the outcome that polls and some models are favoring at this point, and that leads to expectations for a dramatic increase in U.S. fiscal stimulus, that we think could put downward pressure on the dollar, John, and that would, of course, work against the euro as well.
Matt, just quickly, before that trade broadens out, and you have said there we'd need a vaccine and other things as well, specifically going into the election, what's the dollar bearish pair that you'd like to play that dollar against?
So John, we have a couple of choices that we've laid out for our our client base. Number one, we are bullish on the Canadian dollar. Number two, we are bullish on the British pound. And number three, we're bullish on the Australian dollar. We think those three currencies have the best chance in the near term for appreciation against the U.S. dollar.
Still so constructive. Matt Hornback, cheering the market up. Matt Hornback and Morgan Stanley, thank you, sir. Coming up on this programme, the market-moving events you need to be watching. That'll be next in our trading diary from London and New York. This is Bloomberg.
when everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
.25 minutes into the session, equities doing okay, up 0.6% on the S&P, up about 0.4 on the Nasdaq. The curve steeper, bit of pressure on the long end. 30-year yields up almost 4 basis points, 10s up 2 or 3, approaching 80 basis points on a 10-year. That is the price action. Here's your trading diary. Italian and Spanish prime ministers holding a joint news conference on the pandemic at the top of the hour. Look out for that. Coverage coming up with Guy Johnson and Alex Steele. The Fed's Randy Qualls speaking at 11 a.m. Eastern, followed by a slew of Fed speak through the rest of the week. President Trump participating in a town hall at 3 p.m. Eastern. And results from Netflix after the close. Another round of jobless claims coming on Thursday. Friday we get some PMIs out of Europe. And the main event of the week in between, Thursday evening, a debate in Nashville, Tennessee. From London and New York this morning, good morning. Thank you for choosing Bloomberg. For our audience worldwide, this was the countdown to the open. Catch me on Twitter at FerroTV. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He says things in life happens. You know, I'm here by myself.
So ¿dónde vive acá? En la parte de
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
Every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes. The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say,
You applied. 24 people went for the job. 23 people were accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Valleywag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker, so when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I like, you know, I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick like 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
He said, when you come for a chigga like me, that was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for an independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
"It's just Taco Bell, what could possibly go wrong?"
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
He's
That's my dad, son. You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Jade. It's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in the house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
He's written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。逆に初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在しています。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh.
But to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like,
Canada.
Is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like the Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Laura, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions, and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yep.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that the there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in
mean
means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no, and we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So, because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
Is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
HD2 Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF 103.7 FM HD2 San Francisco, and Sirius XM Satellite Radio Channel 119. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Tuesday, October 20th, 2020. 2 weeks from now, less than 2 weeks, Paul Sweeney, we're going to be voting.
Yes, we are, and I think there's a lot of people, including myself, that have already voted.
That's right.
There's going to be, obviously, November 3rd is a key day. The question is, what will we know at the end of November 3rd?
Yeah, speaking of what will we know, will we actually know something about a stimulus plan, another round of virus stimulus? That is certainly front and center. All right, let's get a check on our trading day. For that, let's see what Charlie Pellet is up to. Charlie.
Here's what's going on. We've got the Dow, the S&P, and NASDAQ off session highs, but not by a whole lot. Stocks rallying as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. S&P rebounding somewhat from yesterday's sell-off. Here's where we stand. Right now, the S&P's up 40. That is a gain of 1.2%. The Dow's up 294 points, up 1%. NASDAQ up 123, up by 1.1%. 10 years down 6/32. 10 years 10-year yield now 0.78%. Gold up 0.5%, 19.13 the ounce. West Texas Intermediate crude up by 1% right now. After earnings, IBM slumping 5.7%. Netflix after the bell, little changed, up now by 8 cents. I'm Charlie Pellip. That's a Bloomberg Business Flash.
You are indeed. All right, Charlie, thank you so much. And as Charlie mentioned, we do have a rally underway on expectations of another round of stimulus. Let's get into the trade. Katie Greifeld is with us, cross-asset reporter at Bloomberg News. She's in our Interactive Brokers studio. On the remote access in New Jersey, Dave Wilson, stocks editor at Bloomberg News. So, Dave, take it away. I know Google, we've all been talking about it. It's among our most read stories. But Google shares, despite news of a landmark Justice Department case against the company, they're higher.
Absolutely. I mean, just bear in mind, this case is being brought by a Justice Department under President Trump, and in 2 weeks we may be looking at a replacement. I mean, given the polls and what they're suggesting about Joe Biden's lead in the race, and you've got 11 attorneys general that signed on to this lawsuit, all from states controlled by Republicans. I mean, it really is as much a political focus as it is sort of a legal focus at this point, judging by the gain in Alphabet shares that we're seeing. And beyond that, I mean, even if something does happen down the line, if you do get a change in administration and, they kind of take the ball and run with it in terms of this legal fight with Alphabet and its Google unit, I mean, it may be years before anything happens. So when you put it all together, you've got shares that are higher at this point. I mean, there are lots of areas you can point to, some well-received earnings reports. The one that jumps out for me is regional banks. I mean, you've got Comerica up 7.5%, Regions Financial up 6.3% after their quarterly results came out. A very different reaction than what we saw last week with the money center banks,
right,
like the Bank of America and Citigroup and so on. Regions and Comerica are taking their peers along for the ride today.
Well, Dave, hold on a second, because Paul Sweeney, on our planning call at 1:30, you made a really good point about why we're seeing Google shares higher.
Yeah, one of the theories out there on the street the Justice Department is looking to do here is to somehow curtail the ability of Google to drive traffic to its search site by paying third-party providers, phone operators like Apple, like Samsung. And that number that they pay to these device manufacturers to put the Google search onto their phones is approximately $15 billion, according to an analyst on Wall Street. If that expense were to go away, what would happen to the revenue? Well, a lot of people think most of that revenue would stay. So you'd keep most of the revenue, lose $15 expenses, boom, that goes right to Google's bottom line. So a little bit of a reverse logic there applied to this.
Well, I buried the lead. Katie Greifeld, come on in, because another big story, of course, is stimulus. It's why stocks are higher.
Absolutely. I mean, the tug of war just continues to drag on. But Pelosi did say what markets wanted to hear this afternoon, that she was optimistic on stimulus odds and a little bit of urgency. She acknowledged that the economy needs it. And that absolutely is why you're seeing the S&P pop today. You saw Treasury yields, 10-year Treasury yields, hit their highest level since June at one point. But it's a fairly risk-on picture at this moment, but there's still a lot of daylight between now and the closing bell. We know that Pelosi and Secretary Mnuchin are scheduled to talk more later about a potential deal this afternoon. So it could be a rocky finish as we start to hear some details about how those discussions go.
Katie, why is today the day for Pelosi?
That's a good question, and like I said, there was a little bit of urgency in her comments, whereas previously she had been sort of taking a wait-and-see approach, volleying it back to the Republicans. So I can't speak to the specific political calculus, but it does seem like there is a little bit more urgency behind her comments. Perhaps it had to do with we got some pretty ugly jobless claims figures last week. It could just be that we're getting more and more evidence that this labor market recovery, it's really slowing, and every day that passes it gets more painful for people dealing with the effects of the coronavirus just on their wallets.
Well, you do wonder if lawmakers at some point are saying, and especially we've talked about this about Vince Signorella and some of other members of our team, that if we don't get something now done, we're talking about not getting something until March. That's a long time in the lives of people as well as the economic impact.
Absolutely. If we don't get something now done before the election, if we don't have a new administration installed until January, like you're saying, that's a long time to wait. That's a long time for businesses and consumers to muddle along without any more fiscal help.
Dave, what's up this week for earnings? What are the big ones? I know we got Netflix after the close today. That's one I'll be focused on.
Well, yeah, that's the big one for today, no question. But I'll tell you, I'm listening to this whole back and forth about the stimulus. Bear in mind, the House gets reelected every 2 years. They've got, people have to go home and kind of justify themselves to their constituents before they get elected or not. So, you'd figure the political calculus is as much a part of the timing as anything to do with the economy or anything else here.
Yeah, you do wonder about the role of politics in all of this at this point. All right, guys, thank you so much. Katie Greifeld, cross-asset reporter at Bloomberg News, in our Interactive Brokers studio at Bloomberg headquarters. Dave Wilson, he's going to be back a little bit later on with his chart and stock of the day. Of course, stocks editor at Bloomberg News. And, Paul Sweeney, it's so much about politics right now and policy, right?
Yeah, it is. And you get to this time of year in the election cycle, and how could it not be? But I think the issue for, obviously, the markets is, you really need the stimulus. The Federal Reserve has done all that it can, and people, consumers, Americans need some more help because the numbers aren't trending in the right direction.
Yeah, and we've all talked about the longer it's down, the harder it is for the economy to really bounce back at this point, especially as we watch the virus cases moving higher around the world, and we're watching them certainly in the New York metro area. I know Governor Cuomo had some words, I think, for the neighboring states of Connecticut and New Jersey. And we're going to talk about the stimulus. Alyssa Rapp, CEO of the Healthcare Solutions Company, Surgical Solutions, they've been on the front line when it comes to dealing with the virus. So we'll see what she has to say. I know she's also watching very closely about the impact of the virus on kids as well as education. Yeah, it's interesting. The question is, as the kids are back to school, what's the super spreader risk, if you will, of kids going to school, whether it's half virtually or whatever, and then coming back into the household? All right, and big time, we're going to talk about those supercharged tech names. We mentioned Google at the top. We've got a great name on that. Our own Jennifer Rhee, of course. She's going to play out the legal side of it for us. And then we're also going to check in with Silicon Valley insider and investor Michael Moe. He's been an investor in some of the big tech names, but see what he has to say about the impact on Alphabet and what it means maybe more broadly across the Valley. All right, let's do the Bloomberg Business Week. Oh, yeah, and the Netflix earnings, right? I did forget that. Sorry. It's just a minor report. Yeah. Let's get to the Bloomberg Business Week bite of the day, one number that tells us a lot. Today's number, Paul, it's kind of nice and round, 60%. That's right. Companies are using sensors to try and keep back-to workers apart. As people return to offices, the irresistible desire to mingle is overwhelming safety concerns. Verge Sense has 30,000 body heat sensors deployed in buildings around the world, tracking the workers' whereabouts. It found that 60% of interactions are too close. Yeah, that's kind of weird, isn't it? That is. On many, many different levels. All right, let's get a check on world and national news headlines. For that, over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol, you've been discussing it. Today is the deadline. House Speaker Nancy Pelosi is set to reach some sort of deal on a coronavirus relief package. She tells Bloomberg she believes something must be agreed to today in order to get a bill passed by both chambers before Election Day.
I'm optimistic because I do think we have a shared value, not many, but a shared value that finally is they want to crush the virus. And that's been a change from even over the weekend when they put forth language that wasn't respectful of what we needed to do from the standpoint of science.
She'll be speaking with Treasury Secretary Steven Mnuchin this afternoon in hopes of patching up their differences. Well, the Trump administration is filing a long-awaited antitrust lawsuit against Google, Bloomberg's Nathan Hager reports.
This will be the most significant monopoly case to be filed in federal court in decades. The lawsuit accuses Google of squashing competition to maintain its dominance over internet search, where it controls about 90% of the U.S. market. The complaint is the first phase of what is shaping up as a multi-pronged attack against Google. Texas Attorney General Ken Paxton's preparing a complaint over the company's contact in the digital advertising market, and Bloomberg News has reported other states, including Iowa and Colorado, are readying a separate antitrust case against Google's search business. In Washington, I'm Nathan Hager, Bloomberg Radio.
Russia says it is now ready to accept a U.S. proposal to freeze the number of nuclear warheads and extend the two nations' last arms control pact for 1 year. The U.S. says it's ready to make a quick deal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. And, we just mentioned this on air about New York and really the New York metro area, which we know, Paul, during the height of the virus here in the area, they really worked together, these states on the East Coast, in containing the virus. And I feel like New York and the New York governor, Andrew Cuomo, is kind of wagging his finger at New Jersey and Connecticut and saying, hey, folks, get it together.
Yeah, exactly right. I mean, I think here in the state of New Jersey, we've had, like they had in New York City, some hot spots, I would say. It's not necessarily across the state, but there's definitely been some areas within the state, specific geographic areas that have seen a spike, and that's where Governor Murphy of New Jersey has been focused, and I think that's where Governor Cuomo of New York is saying, hey, what else do you need to get done down in some of those areas to get it under control? And I think that's kind of where we are. But, Governor Cuomo says you can't quarantine between states because there's just too much daily interaction between the states.
Right. It's not like you can draw a wall or a line, right, and say, okay, here's where the virus stops. But that's the problem. I mean, there's so much travel. But, we did see during the height of the virus, I think about Rhode Island when they were stopping cars, like people, and enforcement, law enforcement and oversight was increased when it came to just kind of movement around these states. And I think part of it is like an honor system. Like, come on, just be careful what you're doing.
Right. And that's kind of, you see the signs all around the tri-state area. If you've come in from another area, dial 911, dial 311 or something, or go to this website to get instructions. And so there is that aspect to it. But I think, Andrew Cuomo, as you mentioned, really took a leadership role, if we think way back to those dark days of March and April, not just for New York, but for the tri-state area, and some would say on a national scale as well. And I think he's just trying to kind of play that role once again. And quite frankly, it's welcomed, I think.
Yeah, exactly. And I think if you talk to most medical professionals, they say this is the way you keep it under control. As soon as you start to see some kind of spike or you start to see some worrisome numbers, that's when you start to rein it in, and that's how you kind of keep it under control. So we'll certainly be watching it. This is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ are all rebounding from yesterday's decline. Stocks are advancing as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. Right now, the S&P 500 index is up 43 points, a gain of 1.3%. The Dow up 316, up 1.1%. NASDAQ up 139, up 1.2%. 10 years down 7/32, 10-year yield 0.79%. Gold up 0.5%, 19.13 the ounce. West Texas Intermediate crude up 1.9% at 41.56 a barrel. IBM after earnings down now by 6%. Google facing an antitrust lawsuit up by 2.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. We had a lot of virus headlines today, and of course we were just recently talking about what's going on in New York City. We did have the head of Roche come out warning that a widespread vaccine this year is unlikely, and we continue to see virus spread around Europe once again, a second wave there. There's a lot going on when it comes to COVID-19. Alyssa Rapp is one of those voices we've talked to many times throughout the pandemic. She's CEO of the healthcare solutions company, Surgical Solutions. She joins us once again on the phone from Deerfield, Illinois. Alyssa, nice to have you here with Paul and myself. How is it going?
Hi, Carol. Hi, Paul. Thank you for having me. Well, I think that it continues to be a complicated COVID landscape. On the one hand, we know the diagnoses are up in 56,000-ish a day, and 31 states are reporting more cases than the previous week. And yet there is an overwhelming amount of intelligence now that COVID-19 transmissions from children, and maybe the children are not to blame. So I think it's a tough to navigate.
So, Alyssa, on that front, the children here, the New York City schools are, obviously the largest school district in the country, opening pretty well so far. Does that suggest that maybe children are not super spreaders, which was a risk as we reopened schools?
Great question, Paul. So, there was an interesting article on this in The Atlantic just about 10 days ago that schools aren't the super spreaders from an economist at Brown University, Emily Oster. And I'm certainly not seeing that they're the super spreaders where we are in suburban Chicago. And if children are in masks and socially distant, between that economist view and the American Academy of Pediatrics literally also printed an article that said COVID-19, the child is not to blame. And an Icelandic study talked about how children don't give it to teachers. I am not an epidemiologist. I've said it once, I'll say it again. But to me, the data is compelling that children don't seem to be super spreaders. And I'm really glad the reopening has been less virulent, pun intended, than people anticipated.
Right. We actually had Emily on, and we did a great story in Bloomberg Business Week about her and just kind of her background and her thinking. But we also had her on to talk about her work and her research. Yeah, it's interesting. I just did a big discussion with a bunch of global real estate leaders, and there was a consensus, especially when it comes to colleges and universities, a feeling of we've got to get those students back. I think the concern among colleges and universities has been the older professors and their exposure.
Yeah, and I teach, as you may know, at Stanford University and University of Chicago, and they've been very conservative about Zooming only for the fall out of not concern for potentially me or my age peer group, but older professors. And I think that's actually gone better than expected from a student learning perspective, at least at the graduate level. But I think we do, of course, have to be most concerned about our most vulnerable population, and that includes age and other comorbidities or risk factors. And those are the folks who will likely get the vaccine first, as they should. But the question now becomes, how do we learn to live with it until the vaccine is truly widespread by the middle of next year? And I'm a little bit hopeful, in spite of the numbers I cited in the beginning, that if children aren't the super spreaders and we can at least get kids back to school with masks, socially distant and safe ways, even if it's hybrid learning like my two daughters who are under 10 both enjoy, then at least civilization and society as we know it can start to unlock a little bit.
Hey, listen, your company, you have over 200 employees, are really on the front lines of this in the healthcare system. One of the concerns or questions I guess people have is, okay, we being the U.S. healthcare system was fairly well blindsided by this back in March of last year. What have we learned from a healthcare facility perspective? Are we in better shape for a potential second wave?
I talked to our major hospitals. We have 40 across the country in 9 states, and they are better prepared operationally in terms of PPE and supplies and protocols. But a lot of hospital administrators think about COVID right now as a second job. It literally doubles their workload. So I think the bigger risk is not operational preparedness, but burnout amongst frontline providers as well as the administrators, because this has taken a major toll on our people.
Hey, I want to go back to, if I may, just Alyssa, to education for a moment. I do wonder if there had been some consensus, some overarching guidance from government. I'm not looking to get political here, but some rules from the government about here's some plans and ways to reopen education on a national scale so that we didn't have all these hybrid approaches. Would that have been better and maybe helped get education open, up and running sooner and more and safely?
It may have, but I heard Dr. Fauci speak to the Economic Club of Chicago about 6 weeks ago, and his response to that question was, I thought, the best I've heard, which is our federal response should be one of localization. So it doesn't matter what state you're in, it should matter what locality you're in and what the cases are. Are they on the rise? If you're in a state where it's on the rise, but your locality has no cases of COVID, like some of our hospitals in rural Kentucky, then you should be back open. Your kids should be in school and masks with social distancing, no matter what the state situation is, although I don't know if Kentucky's a rising state today. But what I think his answer is the best one. If the federal policy had been its hyper-local decision-making on this, perhaps we would have had more nimble responses, perhaps.
So listen, I guess, as it relates to these schools and so on, I mean, it seems like the virtual is working. That's I have a high school student with a kind of a hybrid approach. That seems to be one of the more successful ones.
I think hybrid with some in person and some virtual learning does, to me, also, Paul, seem like the more successful approach. If, of course, you can flex to pure virtual if there's an exposure, and if the world is very different come spring and there's a vaccine that's widely distributed, then people could be back. But I am grateful we're back hybrid as well in elementary school. I think the biggest risk, as we know, with our college campuses or graduate schools where young adults are in concentrated settings and maybe not taking as many precautions, and that's where we see a spread. So we'll see.
All right, sit tight. Alyssa, we're going to come back and continue our conversation, do a little bit of news, and then we'll finish up with Alyssa Rapp, CEO of the healthcare solutions company Surgical Solutions, on the phone from Deerfield, Illinois, because there's certainly a lot of headlines when it comes to it. You're listening to Bloomberg Business Week. Carol Masser along with Paul Sweeney, and you're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We are listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. I just had a bunch of tech problems, man. I'm becoming like this.
But you're
tech,
back. I can see you.
Oh, I can see you too. It's like amazing. I can create your own hotspots, sign on.
Yep.
It's just amazing. It's just crazy. All right. Speaking of crazy, all of the virus headlines. So we're going to get back to Alyssa Rapp of Surgical Solutions in just a moment. Let's get back to your top business stories, though. Never crazy, always.
That's what I thought was coming next when you said, speaking with crazy, here's Charlie Pellet, and here's what's going on. We've got the Dow, the S&P, NASDAQ, all advancing as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. We are holding close to session highs. Let me get right to the numbers here. S&P 500 index up 39 now. That is a gain of 1.1%. The Dow up 279 points, up by 1%, and NASDAQ up 120. That is a gain of 1%. So stocks rebounding somewhat from yesterday's declines. 10-year down 6/32, 10-year yield right now 0.79%. Gold up 0.4%, 19.12 the ounce. And West Texas Intermediate crude up now by 1.5% at 41.46 for a barrel of West Texas Intermediate crude oil. President Trump this week came out swinging against Anthony Fauci, the government's top infectious disease expert, calling him, quote, an idiot. Dr. Amish Adalja is a senior scholar at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television this morning, he was asked about the importance of vaccines and science.
I think it's obvious to anybody that looks at the reason why we have lifespans of 70s and 80s and then looks back at the work that science and medicine has done with vaccination, with public health. I don't think that this is a disputable type of thing. And to hear the president call Dr. Fauci or allude to him as being quote unquote an idiot really just shows that he has complete envy for somebody like Dr. Fauci, who has real credentials and has a real track record and has expertise that he will never gain.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. IBM shares lower after earnings. It did report third quarter revenue that beat analyst forecasts last night, but it declined to provide any specific guidance. IBM shares lower now by just about 6%. After the bell, we will be hearing from Netflix. That report will show whether the pandemic-fueled boom is over. Netflix has been picking up viewers with people staying home. Netflix shares right now are trading little changed, up by just about 0.1%. And one additional business note, Bitcoin has climbed back above 12,000 for the first time in more than a month, reaching a key level that chartists and technicians say might set the largest cryptocurrency up for further gains. Charlie Pellet, Bloomberg Radio.
Paul, remember when we talked about Bitcoin like every day?
Yes, exactly right. And before that, it was Brexit every day.
And then it was Brexit, exactly. It's just crazy.
No.
Let's get back to our guest, Alyssa Rapp, CEO of Surgical Solutions. Alyssa, you did mention you are teaching. Are you teaching classes right now? I'm just curious if you are and how that's going.
Yeah, thanks so much, Carol. I did teach this spring in the beginning of the pandemic, and I just finished a course at Stanford Business School via Zoom, of course, and it's going well. It's just a different art form. When you're a professor at a graduate level with 40 to 60 people in the room, you read the room and their body language as well as probing them with the Socratic method. All that can be done via Zoom. It's just slightly different, and it has taken practice. But it's gone well. Thank you for asking.
So you think about it. I have two children in college. Thankfully, it's their last year tuition-wise. But they both said, yeah, it's not ideal, but we're kind of getting through it. The only thing, labs are a little bit of an issue. But other than that, they were doing a lot of their stuff kind of remotely anyway as they get to the later years of college.
Mm-hmm. I think it also depends on the nature of the student, him or herself, right? If this is a self-starter who's going to do the work and still gets to be in an environment with peers, hopefully in a safe environment with peers, social distancing and masks wherever possible, I think that it can be still really successful. I've been really surprised and delighted by how I've been able to develop and maintain really meaningful relationships with students and dive into the subject matter via Zoom. There's no substitute for in-person. I'm not suggesting the world should flip a switch and remain this way once the vaccine is widespread, but I do believe that it is still a very effective way to teach, and it's also all about, not to be self-serving, but the commitment of the teacher to learn and master this new medium, because it is a different way to teach.
Yeah, absolutely. Are you still teaching your class on the wine industry?
No, this year, that one was hard to commit to, given that one really does need to be live. So no, sadly. I do biweekly talk and taste programming with a friend, Tracy Burns, who used to be on Fox Business Network. But otherwise, I'm not teaching wine. This was managerial skills for Stanford Business School and for University of Chicago Business School, women as investors, CEOs, directors, and executives.
All right, more serious stuff. Hey, speaking of serious stuff, I do wonder, what changes when it comes to medical systems, healthcare systems as a result of COVID, whether it's the increase in telemedicine, or I do wonder about whether the financial structures and financial, their backdrops, whether they were really tested during the virus and whether some of them just don't make it through.
I think both. Carol, I think they're both really good points. So telemedicine, according to, the markets, shows like it's accelerated 5 years with market caps for public equities and telemedicine to prove it. And those are one end of the spectrum. And I think there will be more behavioral health online and screening. There'll be more specific matters involving cancer. There's an incredible startup in Chicago actually called Cancer IQ that came out of the University of Chicago, and it helps for pre-screening of cancer through technology. So there'll be amazing opportunities like that should accelerate because of COVID. And yet hospitals, as you already said, operate at such thin margins, 1% to 3%, that if you don't get adequate reimbursement from the government because of the pandemic, or if you're not operating efficiently enough, there will likely be regional medical centers who struggle to make it through and have to either go under or get acquired by a bigger system.
So that kind of continues a trend, Alyssa, that we'd unfortunately been seeing prior to the pandemic. But when you think about the economics of a COVID bed is much less profitable than, say, a cancer bed or something else, a lot of those folks, those 1% to 2% margins, it seems like a lot of areas of the country are going to have faced even deeper pressures.
Agreed. And it got really complicated in terms of the bailouts or government subsidies for entities, because there was a period of time that if you were a hospital that was part of a system with more than 500 employees, you couldn't get access to PPP, which is insane, right? The payroll protection program not being able to apply to our U.S. hospitals was nuts. But I think the Congress figured that part out, to the best of my knowledge. But it's really important that we realize that if we want to have healthy, functioning hospitals and regional access, if not local access to great medical care, we have to really think about the structure of those systems. This pandemic has undoubtedly, in my mind, shed a light on some of those challenges.
All right, we're going to have to leave it on that note. Always get so much when we check in with you, Alyssa. Thank you so much. You do wear so many different hats and really look at the world in a lot of different ways. Our thanks to Alyssa Rapp, CEO of Surgical Solutions, on the phone from Deerfield, Illinois. Yeah, I think it's really telling what you had to say about kind of healthcare systems and what happens from here, Paul.
Yeah, I really worry about, and I read a lot about how some of these smaller communities are losing access to quality healthcare, and the drive to get that healthcare is just getting longer and longer and longer.
Right, and we already see rural communities, where they just don't even have the access. So we still have some big problems there. All right, let's get back to world and national news headlines. For that, over to Nancy Lyons in our 99.1 newsroom in Washington.
Thanks, Carol. President Trump's campaign says the last-minute changes to the debate rules will not stop him from going head-to-head against Joe Biden. The debate commission says it will allow each candidate to speak for 2 minutes uninterrupted for portions of Thursday's debate. President Trump told Fox News it's unfair, and he's really not a fan of the commission.
I had problems with them 4 years ago where they stifled out my mic during my conversation with Crooked Hillary. And they did it on purpose. Look, these people are not good people, this commission. A lot of funny things go on with them.
Democratic presidential hopeful Joe Biden is staying off the campaign trail today and prepping for the debate. President Trump is heading to the battleground state of Pennsylvania. Well, once a coronavirus vaccine does reach the market, there's a question on whether Americans will trust it. The Journal of American Medicine has released the findings of a new study focusing on the factors at play. Cornell professor Douglas Kreiner is the study's lead author and says politics certainly plays a role.
So President Trump comes in lowest in our survey. So people were least willing to vaccinate when the endorsement is coming from President Trump. It's slightly higher from Vice President Biden, hugely so. And then much more likely to vaccinate when it's the CDC or the WHO.
As for when a vaccine becomes available, Roche CEO Severin Schwan tells Bloomberg hopes are still too high regarding the timeline.
I think it's completely unrealistic to believe that there will be vaccines available for broader parts of the population before the second half of next year.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Paul Sweeney. So, all right, when's the last time, I don't know, do you ever take the subway when you go to work? Or you used to?
I haven't since the pandemic, but I take it every day, twice a day. Enter the R train from Penn Station to the Bloomberg office. I saw this story about up to 25% of the transit workers may have had COVID-19, and two things. One, that is a huge percentage, but I'm actually thought it might have been higher, given the contact that these people in close environments. But again, talk about an essential workforce.
Yeah,
and a workforce that was at risk and is at risk. And you just hope that those good folks there, the absolute, one of the first people to get whatever vaccine does in fact come along to the marketplace. You think about them, you think about, obviously the healthcare workers, but boy, those transit people that were there during the really dark times are still there today, getting people back and forth to where they need to get to.
Yeah, it's pretty remarkable. And, this story by Dow Jones, gets into about kind of in the early weeks. And, Dr. Anthony Fauci has talked about this as well, that during the early weeks of the pandemic, transit workers said that they weren't allowed to wear masks or, that they weren't supplied with enough PPE, personal protective equipment, but at that point, right, we were all trying to kind of find our way, and we were trying not to tap into PPE because the medical community really needed it. So it was really, again, we didn't have the playbook, right? We were just kind of finding our way through it. But I agree with you, Paul. I think I could have seen, it's so dense down there. It's so closed off. You're exposed completely to all of the public, that I would have thought, potentially those numbers could have been a lot higher.
Yeah, they've talked about, particularly on the newer cars, they have much, much better circulation systems, air circulation systems than they used to, but still, it just seems like the optimal breeding ground, and it's going to be tough.
Well, anytime you're on a subway, right? Like you grab a pole and you're like, maybe I wish I hadn't done that.
Exactly right, and you do that untold times per day, and it's part of life living in a city.
Yeah, absolutely. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding close to session highs as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. S&P rebounding from yesterday's sell-off as House Speaker Nancy Pelosi said Democrats and the White House are closing in on an aid package, though the Republican-controlled Senate remains in favor of a smaller deal. The S&P 500 index is up 34 points, up 1%. The Dow now up 238 points, up 0.9%. NASDAQ is up 105, up by 0.9. 10-year down 8/32, 10-year yield 0.79%. Gold up $7 the ounce, up 0.4%, 19.11. And West Texas Intermediate crude up 1.5%, 41.46 a barrel for WTI. After the bell, we will be hearing from Netflix. Netflix lower today by 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. This story, Paul, among our most read on the Bloomberg. It's also, I have to say, it's a must-read story because it's about an economist who found, listen to this number, $16 trillion when she added up the cost of racial bias. And listen, we like to do math on these kinds of things here at Bloomberg, and this story definitely delivers. Let's get into it with Bloomberg News ESG reporter Sejal Kishan, along with Bloomberg Business Week editor Joel Weber, both of them joining us on the phone from Brooklyn. Joel, like I said, at Bloomberg, we like numbers, and this is a big one.
That one really jumps out at you.
Yes.
And Sejal found a story that is just one of these stories that it's sort of like, how do you find that story, I think. And it's about Dana Peterson, who is a Citigroup global economist. She tried to put a price tag on race bias in terms of what it actually means to the economy. Sejal, how did she come up with $16 trillion?
Well, it took her something like 3 months to do, and she pored over. I mean, she's a macroeconomist, so she's normally looking at sort of like big macroeconomic data, but instead she turned to microeconomic data, everything from wage levels by race to debt levels by county, for instance, and basically tallied the cost, saying that over the last 2 decades, the U.S. economy lost out on $16 trillion because of racism.
So, Sejal, is this kind of, what's the source of the lost economic growth? Is it taxes? Is it GDP output? Where do we see it in the economy? Or where did she see it?
Sure, yeah. It's a GDP. That was her calculation. She looked at the overall economy and did it that way.
And Sejal, talk to us about where it's landed her. And this was a project that took months, not something that anybody had ever tried to do. And what was the outcome?
Yeah, I mean, obviously her report got a lot of widespread readership when it came out last month. But, since doing her report, she's taken up a role at the conference board where she's now the chief economist there.
What's great about a story like this is, and I feel like, Joel, I feel like this is a number we're going to be quoting at a lot of Bloomberg events, over the next year or so, virtually or other, because it's just, when you put a number on something, money talks and money gets people to do things. I mean, there's another one in your story, Sejal, that talks about her calculations and that an additional 6.1 million jobs a year, $13 trillion in business revenue could have been generated over the last 2 decades if Black entrepreneurs had fair and equitable access to credit. This is a story, VC, the venture capital world, there's just no money going there.
Yeah, no, absolutely. That number also struck me, that $13 trillion in business revenue. That's a huge amount. But she did the work, she did the calculations, and we've also, our tech colleagues on the West Coast have done some stories about sort of the struggles of Black entrepreneurs trying to secure VC capital. So, this is the number that she put on that, which is it's a huge number. And I think putting or quantifying this, this goes beyond the sort of the social and moral imperative of sort of ending racism, putting a number on these things, and to take her words, she says this is a way that people in the world of finance and economic and the economy, which is our wheelhouse at Bloomberg, this is something that they can actually relate to.
So interesting, Sejal. Going forward, I was looking in your piece, you've got some numbers about even going forward, the cost could be just outstanding. $8 trillion gain in gross domestic product by 2050 if we can close the racial equity gaps. That's according to Alterum, a nonprofit in Ann Arbor, Michigan. So the numbers, going forward could also be just compelling.
Yeah, absolutely. And we've done a lot of coverage about how Black and Latinx and other minority communities in the U.S. have been disproportionately affected by COVID and economically as well, not just health-wise. And so, given where the economy is now at the moment, it's not an insignificant number. What Dana mentioned is it's a growth opportunity, and moneymakers are always looking for growth opportunities. So maybe investing in Black-run businesses, for instance, is a way to not only help that community, but to get the overall economy back on its feet.
Sejal, another thing that stood out to me in the story, and it's just sort of one of those daggers in the heart, was this sort of this is a person that worked at Citi for a really long time and never put her face into the system because she didn't want her colleagues' bias to impact sort of her ability to do her job. Talk to us more about that side of the story.
Yeah, no, absolutely. That was one of the most poignant parts of the conversation I had with her. She's been on financial news networks, including ours, so it's good to see. But it was a really sad reality that she wanted to be judged on her work first, rather than people judging her on her race. And so, not putting her photograph on the email system, felt that she would have a better shake. Or fair shake at being chosen to do presentations or write reports. But it was a really poignant part of the interview.
Oh my God, that personal story, and just talks about growing up and being stopped by police and frisked by police, and then going to a job and just seeing disappointment on a prospective employer's face. It's just. I think about this past year, and we talk a lot about racism and the impact of it, but when you start to hear these first-person stories, Sejal, this is real and it's rampant.
Yeah, no, absolutely. I think that's something probably that a lot of people miss, is the fact that there are so many professionals out there who unfortunately do endure the same sort of racism that everybody else does, and I think we don't pay so much attention to that, and her bringing and talking about her story brought that to life. It was a real sort of reality check.
Yeah, well, I'm glad you've told it. A really great story. Yep. And you can find this story certainly at Bloomberg.com and online and on the Bloomberg terminal. The headline, Economists finding $16 trillion when she tallied the cost of racial bias. All right, Sejal, thank you so much. Sejal Kishen, she is our Bloomberg News ESG reporter on the phone from Brooklyn. Also from Brooklyn, of course, our thanks to Bloomberg Business Week editor Joel Weber. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you are listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. I have to say, though, Paul, it's like this story I'm going to tuck away because I'm working on a lot of panels, and it's like when you say this number, it's like it just stops people because, there is, first of all, the right thing to do, right, and get rid of all of this biasness and racism, but it's also, there's a huge financial cost.
There's a huge financial cost, lost opportunity, and opportunity cost for generations of people. And I think the issue is if you can put a number on it, it makes it more real for a lot of business people, and people think that way. And I think that helps kind of humanize the problem a little bit more for people that may have problems relating.
Yeah, no doubt about it. All right, you're listening to Bloomberg Business Week, and this is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, October 20th, with the Dow, the S&P, NASDAQ all advancing. Lawmakers are negotiating the size of a potential spending bill to bolster the economic recovery. The dollar has weakened, but the S&P 500 index rebounding from yesterday's sell-off as House Speaker Nancy Pelosi and Democrats and the White House all closing in on an aid package, though the Republican-controlled Senate remains in favor of a smaller deal. So here's where we stand. The S&P's up 33 points right now, close to session highs, up by 1%. The Dow's up 241, up 0.9%. NASDAQ is up 100 even, up now by 0.9%. Your 10-year down 8/32, 10-year yield 0.79%. Gold up $7.31 the ounce, up 0.4% at $19.11. And West Texas Intermediate crude up 1.5%, $41.46 a barrel. Nobel Prize-winning economist Joe Stiglitz says banks have gotten out of the business of providing capital to small businesses and need to be redirected toward that mission as the nation recovers from the coronavirus pandemic. And in a Bloomberg television and radio interview this morning, Stiglitz also slammed the stock market as, quote, a perverse barometer of economic success.
The strong stock market is almost a sign that things are not going well in other parts of the economy. So precisely, we need to focus on the role of market power in our economy, the low wages, the fact that at the bottom wages are the same as they were 65 years ago, adjusted for inflation.
The Justice Department is suing Google for antitrust violations, alleging that it abused its dominance in online search and advertising to stifle competition and harm consumers. The litigation marks the government's most significant prosecution for several years. As for Google shares, they are now trading higher. Google is up now by just about 2.5%. Apple up 1.9%. Amazon up by 0.9%. Facebook up by 3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
It is Bloomberg Business Week. Carol Masser along with Paul Sweeney. And this week's presidential debate, Paul, it's, I believe, expected to focus on foreign policy, but we shall certainly see what happens. And sure to come up is the U.S. relationship with China. So let's get into that, and also some thoughts on geopolitical risk in Asia that investors may just be ignoring. David Riedel is president and founder of Riedel Research Group. He's on the phone from San Francisco. David, so nice to have you back with us. I think the last time we talked was May, I believe. How are you?
It seems like a long time ago. I'm very well, Carol. I hope you're well.
Yeah.
It seems like there's a new drama every week for markets, huh?
Well, absolutely. And here we are less than 2 weeks out from the presidential election. We're all gearing up for the debate. Talk to us a little bit about what you're watching in terms of some of the geopolitical risk over in the Asian region, because we do expect some of that to come up perhaps on Thursday in the debate.
Well, I certainly hope it does, because there's a lot of risk out there, and I think people are ignoring it to their peril. I think people aren't correctly following the conflict between India and China that flared up a couple of weeks ago, this ongoing tension between the U.S. and China. People are distracted by the election, of course, and by the pandemic and sort of the drama of the week, and they sometimes forget to pay attention to things that are on the horizon a little bit, but which really could have a big impact on investors and on risk appetite if one of these things came to fruition.
And David, you could put me on that list of people who may have taken my eye off the ball of things China there, as this pandemic has kind of taken center stage here. The last we really had China in our focus, arguably, was in Hong Kong, the protests in Hong Kong. Can you give us an update on what's going on in Hong Kong?
Absolutely. So Hong Kong continues to see its special status erode, being treated by China increasingly as just a simple extension of China, and ignored, unfortunately, by other players around the world, which would traditionally be in support of the one country, two systems approach that had been agreed to. The UK, of course, with a long traditional connection to Hong Kong, has been distracted by Brexit as well as their own issues with the pandemic. And the U.S., long someone who would stand for democracy and human rights, has been distracted and less focused on those issues in recent years and certainly in recent months. So unfortunately, Hong Kong continues to suffer the erosion of its unique status and special rights.
Does it not be the place, the financial, place it's been? I mean, is that just, that's the past now? It's not the future anymore?
Unfortunately, it is the past, and a lot of things, the U.S. has actually taken some steps to make it less attractive as a financial center, taking away its special status relative to China, because now they just continue an extension of China, not a unique place. So I would really watch Singapore and Shanghai to be the up-and-coming financial centers in Asia. It's been a long time coming. It's not going to happen overnight, but I think it's an inexorable move towards those new centers.
Hey, I do wonder, David, how do you factor in the election and the election outcome, whether it's a Biden White House or whether it's a second term of a Trump White House, and what that means for China-U.S. relations? Because I do think it's safe to say that the U.S., not just under Donald Trump and his team, but we're moving towards more pushback against China, generally speaking.
Absolutely right, and we should. I mean, they have really emerged since the 1970s and 80s into now the second largest, and by some measures the largest economy in the world, and it's natural that our relationship with them would be more tense, more confrontational, and more dynamic at this stage in their growth relative to ours. I think that the Republican administration has been less predictable in their actions, and I think that has been frustrating to many of our allies in international relations, as well as some of our people with whom we have more ideological and economic disputes. I think that many people would wish a more predictable actor in terms of actions and relationships with other countries, trade relationships, and so on and so forth. And I think they may see that in a Biden presidency. I suspect they would not see much predictability in a second-term Trump, and I think that would be a continuation of what we've seen in recent years, which has not been good for many of our international relations, and I don't think it's been a healthy development in our relationship with China.
David, if the Democrats do take the White House and perhaps even the Senate, do you expect that they will take a noticeably, confrontational or stronger stance against China than perhaps even the Obama administration did?
I think that they will, and I think that's a reflection of the reality of how far we've come. Having not dealt, I think, appropriately with, for example, supporting the Hong Kong protesters, the Uyghur minority in Western China, not confronting China on those fronts, and then having a erratic and confusing trade strategy with China, I think puts us in a place where some things need to be confronted on the human rights side, and some things need to be stabilized and sort of managed on the trade side. So I think a Democratic administration, and especially if they have some congressional power as well, would be a more predictable but more harsh partner with China going forward.
David, got about a minute, and then we'll come back and do some more. But just before we go to break, I mean, China and Taiwan, where is that headed?
Nowhere good. China has actually, just in the last few weeks, had some of its most aggressive military maneuvers in the Taiwan Strait. Yeah. Taiwan has been edging more towards independence, been more vocal in their views of themselves as a separate country, not as just a province of China, as that long-standing dispute. And other countries around the world have now started to accept that Taiwan is its own entity, and I think generationally we're headed towards a time when Taiwan and the Taiwanese think of themselves in that way. And China's not going to take that sitting down. So yeah. I would suspect that there's going to be some conflict there, as well as the issues that we see in the South China Sea, which are really getting heated up at this time.
David, hang on, and we're going to do some news, and we'll come back, because I do also want to get your thoughts on some stories that are on the Bloomberg today, talking about kind of the rise of Xi thought, President Xi specifically, and his thinking about everything, and just their Paul, their longer-term vision on everything.
Yes. Everything, yeah.
And we're so short-term.
Exactly right, and it's he has really cemented his position there in China. It's amazing to see over the last really 5 to 10 years.
Yeah, it's pretty remarkable. All right, we'll come back to David Riedel in just a moment. Right now, back to World and National News headlines. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The Justice Department is suing Google in a landmark antitrust case. The lawsuit accuses the tech giant of stifling competition to maintain dominance in online search, and ad markets. Deputy Attorney General Jeffrey Rosen explains why the lawsuit is being filed now.
The matter has been investigated for more than a year now, and as I think folks are generally aware, in technology industries in particular, it's important to move as quickly as is practical because the markets are fast moving.
Officials say they targeted the search aspect of Google since it's at the heart of the company's business. 11 states have joined in the lawsuit. The Department of Homeland Security says it's launching a new effort to combat human trafficking. Acting Secretary of Homeland Security Chad Wolf says they're joining forces with other agencies to create a center with the focus on eliminating the problem.
By aggregating these resources, the center will serve as a central hub for victim support, investigative operations, intelligence and data collection and analysis, and training and outreach of law enforcement partners, civil society, and the public.
Wolf says the collaboration will allow DHS to better investigate, interdict, and prosecute perpetrators of human trafficking crimes. Well, the World Series gets underway tonight with the Tampa Bay Rays taking on the Los Angeles Dodgers. The Fall Classic will be played entirely on artificial turf for the first time since 1993 at the new Globe Life Field in Texas. Attendance will be limited to about 11,000, the smallest crowd for a series game in more than a century. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. And, I was just kind of scanning our most read on the Bloomberg, and there really is kind of a hodgepodge of stories. I mean, obviously, stories, Paul, right now on stimulus and whether or not we get this package done. So we have a lot on that. We have a story by Jonathan Bernstein of Bloomberg Opinion on why Biden is planning his transition already. And then you've got a story about the New York Jets, who are not doing so well.
It's just, I do listen to sports radio, and in New York, we've got two good sports radio stations. And I think where the consensus is for New York is, all right, at least with the Giants, we have something to work with. There's some tools there. There's some things to build on. There's a reason for hope. Heck, if they win Thursday night, they might even be within shooting distance of a playoff berth. That's how bad the NFC is. However, the other friends in town, the New York Jets, the consensus seems to be just hopeless. You have to just clean house and almost start from scratch. And they're already talking about who's going to get this quarterback from Clemson, who likely will be the number one pick. Will it be the Jets? And so do you tank in order to get the number one pick? So it's a little ugly out there for New York football.
It's a little ugly out there. I know. I grew up a Giants fan and with my dad and going to the games and stuff. They've had a couple of rough years, I feel like, the New York teams.
Yeah, we kind of hold them up as, one of the great franchises. But the fact is, yes, they've won some Super Bowls, which is great, and 2 under Eli Manning. But they go many, many years, very, very down years. And you just don't see that from the really strong franchises, the Steelers, for example, and some others. And so that's what I think gets some people, Giants fans frustrated.
Yeah, exactly. So, that's just the way it is. But at least there's football. I'm just going to put it out there that at least there's a game for somebody to watch.
Yeah, and I think they're all trying the best that they can. Big Ten football comes back. My son's a student at Penn State, so they're all fired up out there in Happy Valley. So hopefully they can do it safely because the kids, it's one thing being a professional, it's another thing being a student athlete.
Yeah, no doubt about that. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks well off session highs, pairing gains. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are pairing gains, and like you said, well off session highs. Dow's only up 68 points now. S&Ps are up 12, while NASDAQ is higher by 26. The U.S. 10 yield at 0.8%. Gold trading higher by 8. Transports jumped 200 points, and among the main 11 S&P sectors, all were in the green, led by gains in energy, telecom, and the financials. Leaders to the upside in the Dow, Travelers, Walgreens, and Goldman Sachs, while IBM fell 6.5%. And led to the downside. Also after earnings, Lockheed Martin and Philip Morris both fell. And in other news, AstraZeneca's U.S. COVID trial may resume as early as this week, and the U.S. Justice Department has filed formal antitrust lawsuit against Google. Wrapping things up, Netflix reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We'll be all over Netflix as it hits. And to hear live breaking news over your Bloomberg Times Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Bloomberg Business Week. Carol Masser, Paul Sweeney with you. Bringing back our guest, David Riedel, president and founder of Riedel Research Group. And the reason this conversation is important is David's reminding us that China and U.S. tensions remain high, and there are significant ramifications. We need to keep that on the front burner as investors. David, thanks so much for coming back. You know, I want to get to the point of President Xi. What is his position right now in China? It seems as strong as it's ever been, is it?
It is the strongest leader that they've seen in recent decades. He controls every lever of power, continues to make himself ever more powerful, and has enshrined himself in Chinese political history by implementing what's considered now to be Xi thought on the same level as Mao Zedong thought, which is an incredible accomplishment for a modern Chinese leader.
What is Xi thought?
It revolves around a strong belief in nationalism. That's been true for many leaders, but it's more core to Xi's identity, and a very significant commitment to the military. Xi has been dramatically expanding military spending. They've built several times more ships since 2015 than the U.S. has, and now have a larger Navy than the U.S. This is an incredible turnaround of the last 10 or 15 years, when China's lack of a blue water Navy was really one of their military weak spots. So complete control of the military, of the political apparatus, and a dedication of all those resources to protecting China's national borders and national mission.
You know, David, when you talk about the buildup of the military, is that for show of might, or is that for actual might to put to work?
It's for actual might. They really feel very strong. They need to have control of more firm control of their borders, hence the dispute with India a few weeks ago, and very significantly protect their strong belief that they need to control the South China Sea for its oil and gas reserves, as well as its importance for seagoing trade, and it's so important to North Asia, Japan, and Korea, as well as to China, getting access to all the materials they need to continue to run the largest economy in the world.
So, David, what do you think the Chinese government leadership wants, or how does it want its relationship with the United States to evolve? Are they looking for conflict? Are they looking for, hey, just treat us as an equal partner? What do they think? What do you think they're looking for?
Or do they not even care about us that much anymore?
Oh boy.
Yeah, they don't. They do. I think they do care about their standing on the international stage. So let's globalize this for a second. Less important what their relationship is with the U.S., but they do want to see themselves in the upper echelon of countries, a equivalent power to the United States, for example. And they do have a 50 and 100-year view of how they're going to evolve towards this position of being the wealthiest country in the world, the largest country in the world, and the most powerful country in the world. And they'll wait generations to do it. They just really feel like they were humiliated by international powers back in the 1800s, and they never want to live through that again. So they need to be strong, powerful, and very well grounded in terms of their ability to control their sphere.
So what holds them back? And I do wonder too about, there's certainly their relationships with the big global powers, but there's also, relationships that they do on the side. And I do wonder how much pushback we see from other developed nations, especially when it comes to human rights abuses, privacy concerns, and other things that if you are going to operate in the upper echelons of power, there are certain rules that go along with that.
That's right, and we had long believed that as they became more involved in global negotiations and discussions and multilateral organizations and so on and so forth, they would start to play by those rules. But we've learned in the last 10 or 12 years that they're actually working to change those rules. So they don't have an interest in really playing along with the World Trade Organization and the UN and so on and so forth. They want to create parallel organizations or mold those organizations to reflect their growing power. They are very frustrated, for example, by the structure of the UN, which was, of course, created after World War II, that really excludes them from a position of power and influence in that organization.
So just a minute left here, David. So what does this mean for investors? Because I think about all those global multinationals that they would do anything to be in the Chinese market. So as investors, how do we need to think about it? And just got about a minute here.
So think about the history. The U.S. market has tripled over the past 10 years. It's nearly doubled over the past 5. Global markets have more than doubled over the past 5 years. The U.S. S&P has gone from 20 times PE multiple in 2015 to 35 times today. Many of these markets are priced for perfection. Investors simply have to realize that it is more likely than not that we will have some sort of geopolitical upset. Perhaps it's an accidental collision of two vessels in the South China Sea, where the U.S. has a new aircraft carrier group, the Ronald Reagan Group, down there right now. A small mistake could lead to a reevaluation of risk appetite around the world, and investors could really pull back on some of their enthusiasm for equity. So I think people need to be defensive, they need to be aware, they need to be informed, and they need to sort of look out beyond what's happening this week, this month, this year here in the United States, and think about longer term. Where are we going to be 2 years, 3 years, 5 years from now?
Well, and certainly China is somebody who understands long-term strategies just generally overall. So that's some really good insight. David, thank you so much. Great to catch up with you. David Riedel, president and founder of Riedel Research Group, joining us on the phone from San Francisco. Coming up, Paul, we've got the chart of the day.
We got the chart of the day, hopefully accompanied by the song of the day as well.
See if we can guess it. All right, that's coming up right here on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. Coming up, we're going to get into Dave Wilson's chart of the day, Paul.
Yeah, absolutely. It's interesting on this market here. We just saw some strength there, but just kind of fading here. So a little disconcerting. But again, it's all about trade talk.
Yeah, exactly. And that stimulus program, right? All right, we'll get into the chart of the day in just a moment. Dave's looking at IPOs in just a second. Let's get in. Let's check in with Charlie Pellett for an update on headlines. Hey, Charlie.
28 minutes to go ahead of the closing bell. Can't forget Dave's song of the day. How will he possibly find a song about IPOs? You got to stay tuned for that. A bounce off the bottom here, as Paul mentioned, but the Dow, the S&P, NASDAQ, well off session highs. Right to the numbers now. S&P is up 23 points higher by 0.7%. The Dow up 177, up by 0.6%, and NASDAQ up 55, again there of just about 0.5%. 10-year down 8/30 seconds, 10-year yield 0.79%. Gold up $7 the ounce, up 0.4%. 19.11 right now on the precious metal, and West Texas Intermediate crude up 1.5%, 41.46 for a barrel of West Texas Intermediate crude. After earnings, IBM slumping 6.4% right now. Netflix will report after the closing bell, down 0.8%. 3:32 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
29 years ago, college dropout Jeff Weiss started his small company in Hudson, New Hampshire. Green Streets is a distributor of paper, packaging, safety supplies, and personal protective equipment. The pandemic means that he is crazy busy. You actually started preparing back in January.
Unlike a lot of companies, we were very poised and positioned to take advantage of what was going on because we were already in the business of PPE and the related supplies. And we foresaw what was going on back in January, so we already started pre-buying a lot of the products that would become necessities back in January, February. I mean, we've had everyone from shopping malls in California to hospitals in San Francisco to veterinary clinics in Washington call us because no one could get gloves, no one could get PPE, no one could get cleaner, disinfectant.
You have the existing contacts that make it easier for your customers now to get these products.
Correct, but it doesn't make it easier in still getting them because, like, for instance, like on gloves, we are only able to get about 50% of our normal volume because there's just not enough supply to go around. And you can see it on the store shelves as it trickles down to the retail end.
It doesn't look like that's going to clear up anytime soon, does it?
No. So what happened, you had the closure in the winter months was bad. So we're still recovering because there's social distancing on manufacturing lines. Raw materials have gone up because as everything is opened, different products like takeout containers, for instance, for restaurants. There's a shortage on plastic because everyone's gone to containers. But the manufacturers can't keep up with demand. They can't get enough plastic, and they don't have enough people to run the machines.
Jeff, we'll have to leave it there. Jeff Weiss, owner of Green Streets in Hudson, New Hampshire. I'm John Tucker. That's your Bloomberg Small Business Report.
And John Tucker, we thank you. Stocks trimming advances, lawmakers negotiating the size of a potential spending bill. Right now, the S&P is up 21, recapping up by 0.6%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie Pellett, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. I don't know. I kind of like the drum riff, but I have no idea what it is.
Band?
Yeah. Is it?
No.
Is it Who? The Who?
It is.
Oh.
I could just right there. I could just feel a little Tommy there.
Yeah, very good, Carol. You didn't need Google for that.
I did not cheat. I swear to God. And actually, my first. All right. Okay. All right. I'm gonna be real. I started to put in too much of anything, and then something weird came up, like too much of anything is bad, or I don't know what. All right, but it wasn't the Who. And then not until I heard that one little part of the song.
Well, there you
but
go.
it's old, right?
Yeah, it's old. It's
Yeah.
around from the Who's Next era, so you're talking almost 50 years ago.
Wow.
It didn't make that album. It came out on a collection called Odds and Sods, so, kind of obscure, but it struck me as fitting for this chart because the real question is whether we're getting too much in some specific areas of the market, and it's something that Tavis McCourt, who's an institutional equity strategist over at Raymond James, pointed out in a note, and he specifically focused on, you've already mentioned initial public offerings, IPOs, as well as alternative energy stocks, that if you look at those areas of the market in relative terms, over the past 7 months or so, they have really taken off, and the chart illustrates just how strong they have been. If you look at the Renaissance IPO Index, which is a gauge of all these newly public companies, in the last couple of years or whatever, up 76% through Monday from a low in mid-March. And if you do the same with the Russell 3000 alternative energy equipment, it's a little geeky, but anyway.
It's Dave, it's a lot geeky. I'm
okay,
looking
fine.
at your chart.
You got to have some way of pulling the group together,
Okay.
though. Up 172%, and we're not talking in absolute terms. In both cases, we are talking relative to the Russell 3000, one of the broadest gauges of U.S. stocks around. So these two groups really outsized performance after, a kind of a lackluster few years, as the chart illustrates. And the way that McCourt sees it, it really comes down to being what he called liquidity-driven. All this money sloshing around, interest rates are low. Got to find a home somewhere, and so it's ending up in some of these more speculative areas of the market, specifically IPOs, and we talk alternative energy, of course, solar, wind, all those forms of power. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. And you can see for yourself why he calls these price moves odd, McCourt does. So you're talking about equity oddities here. And the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It feels like taking a dartboard and just throwing a couple of darts and okay, so let's do this and this.
It points to speculation, Dave, as you were pointing out. It's just kind of one of those things. I think Robinhood, I think day traders, I think, charts like Dave was showing here with some IPOs and some of those other environmental names. It just kind of brings me back to the late 90s and .com and all that. A little bit worrisome on the valuation.
Right, and that's really his point is, to have this going on, in a broader market where, you're seeing some things shift around, but nothing like this. You just have to wonder what the heck's going on here. Looks kind of strange.
Well, time will tell how it all plays out, right, ultimately?
It always does.
Where the bubbles are. I mean, it doesn't, come on, Paul, you were there during the I mean, do you feel like the IPOs that we're seeing feel like that?
No, I don't. They're much better, but the valuations that we're seeing are just extraordinary. But these businesses that are coming out today are actually established businesses for the most part, as opposed to the .com that was just thought of 15 minutes ago.
Right, and there's actually companies that are making money. All right, Dave Wilson, thank you so much. Dave will be back a little bit later on with his stock of the day. Back to world and national news for that. Let's bring in Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. House Speaker Nancy Pelosi tells Bloomberg there is some progress in discussions concerning the next round of stimulus. She's talking this afternoon with Treasury Secretary Steven Mnuchin, hoping to find some common ground on a bill so it could be passed before the election. Bloomberg's Irv Chapman with details.
Her 48-hour deadline was for both sides to lay out their specific proposals in order for a bill to be possible by Election Day, Pelosi explained in a Bloomberg interview.
I'm optimistic because I do think we have a shared value that finally is they want to crush the virus. And that is our main goal in this legislation so that we can open up our schools, open up our economy safely.
Pelosi indicated that even a major sticking point like the Republican demand for liability protection for businesses is negotiable if its scope is limited. In Washington, Irv Chapman, Bloomberg Radio.
The Justice Department says it's suing Google for antitrust violations, alleging it abused its dominance in online search and advertising to stifle competition and harm consumers. Jennifer Reed is with Bloomberg Intelligence.
Companies can enter exclusive agreements, and they do, and they can be perfectly lawful if they don't foreclose a substantial portion of the market. So the allegation here is that Google has entered so many of these contracts with so many of the outlets that they sort of crossed that line, and they've gone to a point where the conduct has become anti-competitive.
Google has long denied the claims of unfair competition. Google argues although its businesses are large, they are useful and beneficial to consumers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons with World and National News. So this story, Paul, is the most read story on the Bloomberg in the past 8 hours, and it has to do with the two most senior commodities executives over at Morgan Stanley. They're leaving after compliance breaches linked to the use of communications tools, and that includes WhatsApp, according to a couple of folks familiar. You're shaking your head like, really?
Wow. I mean, I was just thinking back in the day, as it were, and these types of people. This is the number one and number two person in the commodities business, which is a huge business for Morgan Stanley. In the old days, for better or worse, they would have been